All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Looks like we are getting a bit of a bounce on some altcoins today. And is this the end of the dumpage? Are we about to keep pumping to the upside on the altcoins? Or is this just a lower high in the making before one last leg down on the altcoins before the real opportunity comes? We are going to go ahead and talk about this today. We're going to talk about Bitcoin a bit. We can go over a lot of the altcoins. We'll go over some of the major altcoins. We'll go over the total market cap, Bitcoin dominance, all that stuff, and just kind of diagnose what's happening in the markets. So welcome in, everybody. Let me know, can you hear me okay? I know the music is off right now. I am going to try a stream without some background music just to see how it goes here. And welcome in. Thank you guys for joining. What's up, Lou Dong? What's up, Kevin? What's up, Manan, Marco, T-Mac? Everyone, welcome in. Archie, how you doing, man? Welcome in, everybody. So, all right, guys, here's the thing. Bitcoin is still in its range, and we are just continuing to range in this, we're squeezing together. Whether you want to call this some sort of triangle that's forming here, we are squeezing together, and this squeeze is going to eventually end up with a bigger breakout, either to the downside or to the upside. And I would like to point out what I pointed out in the last couple of videos and streams with this pitchfork that we have here. So let me go ahead and zoom out a bit. And this is the pitchfork I've been following really for about 9 or 10 months now. I'm on the daily time frame, and it was just pulled way back down from our 2024 range lows. We had our 8-month range in 2024, and we had that initial low, taking all the liquidity out, a little bit of a change in market structure on the daily, breaking above these lower highs, higher low in the making. This was our first signs that the range was maybe going to be done with, and we were going to pump in that last weekly fifth wave to the upside on our weekly Elliott wave impulse. So this pitchfork is a pretty important shift in structure and continuation, and you can see it was really well respected as we were going on, hit into the upper band, reject, come to the lower band, another rejection from the upper band, held the midline multiple times, pumped through it, formed that all-time high range, our prior all-time high range above it. But once we, back tested a few times the support, once we lost it, we dropped to the bottom. We even saw a deviation of the bottom. Once we got back into it, we just started grinding our way up through that pitchfork again, which we oftentimes do. And we have come up recently. Let me zoom in now onto the 4-hour chart, and we can look at our local price action here. We did hit our 1.618 Fibonacci extinction target from this current impulse from 98.2K, this 112, our 3 here, and it's potentially not done yet. And we hit into that top band of the pitchfork, rejected from that top band, and you can see we have dropped to the midline, and over and over and over this midline is holding us. And the last time we saw something very similar to this was back here when we broke above the midline. We held that midline multiple times as support, and then we pumped up to the next major level of resistance again, being that upper pitchfork band. And so we are doing something very, very similar here. And you can see in this range, the last time we were holding this pitchfork midline as support, we were creating that same type of triangle structure here, where we were consolidating, squeezing tighter and tighter, and it ended up with that breakout to the upside, because overall we are in a bullish trend on larger time frames. So our bias has to be bullish on larger time frames. Now, that doesn't mean I still am looking for a potential liquidity grab of our range lows at about 115.7 down to about 115.3. And I do think it's possible to see a fake out, one more fake out to the upside, taking these internal lower highs and then coming down and grabbing that before continuing the real big breakout. Those kinds of retail fake outs are always possible. And that is something that I will be watching. And the main reason why I'm going to be watching that, if we go on to our liquidation heat map charts here and we look at the last 2 weeks of price action, this is just all the exchanges aggregated, just all of Bitcoin. And pretty much it's just showing us this whole range that we've been in for 2 weeks. And you can see here, where is the liquidity resting? It is resting underneath us into that 115.3, 115.4K area of support, which would be the liquidity grab of our range lows, grabbing all that liquidity, stopping out all those longs that have been opening up the past 2 weeks here, We do know that market makers usually do not allow those late longers to stay in the game. So we could see that one last liquidity grab stopping out all those late longers, and then we could see that real move up to push up to higher levels. But overall, we are looking at our impulse from the 98.2K lows, which if we go on to our higher time frame pitchfork, now this pitchfork, I just showed you where it was pulled from the ending structure of wave 4 on the weekly, that 2024 range. But if we go onto our more macro pitchfork here, this is the second most macro pitchfork we have. And we just go ahead and I'm going to zoom out real quick here and show you guys on this one. We'll go back onto the daily time frame. And this was pulled based off of our Elliott impulse pattern. Actually, let me zoom out to the 2-day chart here so we can get a better look at this. And if we're looking at our 5-wave impulse on the weekly time frame, let's see, do I still have that on the charts? I do not. Let's just grab that real quick. We have our bear market lows. We have our wave 1 highs of our weekly impulse up here. Our wave 2, that was a flat correction that we saw. That's not perfect, but you guys get the idea. That's your wave 3, your wave 4 correction in 2024. That's the start of where that last pitchfork was pulled from. And then we had our wave 5 coming up, completing here in that 5-wave weekly impulse. And then we saw that multi-month correction down. Now, once you can see on this push up that we've seen over the past 2.5 years, where did we end at? We ended taking that pitchfork from the lows of wave 3 to the highs of wave 3 to the lows of wave 4. You can see that this pitchfork has been highly, highly respected as well, grinding through the lower band, busted up to the midline, rejected the midline, but made a higher low, busted up to the top of the pitchfork. We saw 3 rejections at the top of the pitchfork, creating all-time highs. The lower band here, let me zoom back into the daily now that we can get a better look at this. The lower band, the upper band of the pitchfork held as support. You can see here in this, what I called the previous all-time high range. That was this range from November through February. You can see how that band was holding as support for months on the daily time frame. Yes, we did see wicks past it, but no daily candle closes below it. And then we finally got, but as this range was forming, we were forming the bear divs on the chart. Money flow was draining out of the asset. We were expecting a bit of a distribution out of this range. We did get that distribution out of that range. And really, the catalyst for me was why I was expecting distribution in this area, and I did make a video on that before it happened, was based off of this money flow and these high time frame bear divs that were forming. But also, we had started to lose, right in this area, we had started to lose that pitchfork band of support. And we were having trouble reclaiming back into that band. And of course, right here was the Bybit hack. And once the Bybit hack happened, we saw that big flush down with this pump up right here. This pump up was based on a Sunday. Trump tweeted about the Bitcoin reserve. I'm going to zoom in here onto the 8-hour chart now. And I just want to talk about this push up here was that move that Trump tweeted about a Bitcoin reserve. So we pumped up a little bit above that midline, but that was a news-based fake out tweet where you can see we just dropped right back down in that 3-wave corrective move. But since we lost the midline, we back tested it 3 times. We could not reclaim it. So what happens? You drop to the next major support level. Now, those were our 74K lows. You can see how well our pitchfork held on those lows, showing that this pitchfork really is doing well on high time frames for swing positions. Now, we busted above that midline, came up to the upper band, rejected that upper band once again, and what did we see? We saw that 3-wave corrective move down to backtest the midline. We hadn't backtested that midline since we broke above it. We backtested the midline, and that was our 98.2 lows. Now, this is key here. These lows backtesting this midline. So if we are expecting the impulse, the overall impulse from 74K to continue, we want to see high time frame support hold, and we want to start to impulse up from that high time frame support, from that hit of support. So we did get that bounce, and you can see here we did start to impulse up. We changed market structure. Just barely, but we changed market structure. We had our wave 1, we had our wave 2, and then we had an internal, what we call a subwave 1, a subwave 2. Then we saw our big wave 3 impulse up to new all-time highs, and that's where we hit into that 1.618. It was also around the upper band here. And once again, we're forming ranges in this band. And I've talked about this over and over on my YouTube channel, both the lower band of the pitchforks and the upper bands of the pitchforks. For oftentimes you will form ranges inside these bands while the market consolidates and waits for a decision to be made. And, we saw that a very, very good example of that is if we go back to Ethereum and we look at Ethereum here, right before its giant impulse, we ranged within that band for a couple weeks, and then we broke out to the upside. We broke all the way above the midline of our pitchfork. So Bitcoin is in one of these ranges right now, deciding what it's going to do, if we are going to break down or if we are going to continue that bullish trend to the upside. And the bias for me on Bitcoin, based off of our 98.2K lows, based off of our impulse from these 98.2K lows, is that our double 1-2 impulse is not completed yet. We have our wave 1, our wave 2, our internal wave 1, our internal wave 2. We have our wave 3 up to that 1.618. So now what we've been expecting for the past couple weeks is a wave 4 retrace, and then another wave 5, and then another internal wave 4, and an internal wave 5, kind of ending with that diagonal structure or that exhaustion type structure before ultimately breaking the impulse down and potentially even creating higher lows at your golden pocket before more upside. So my bias is still for higher on Bitcoin, but is our wave 4 done? That's what we are in right now. So we are looking at two major pitchforks. We are looking at this pitchfork pulled from the wave 3 weekly impulse. And then if we go back to our Coinbase chart and we look at our pitchfork that the midline is holding, and this is a smaller pitchfork, a tighter pitchfork, but it's still being highly, highly respected. And you can see both pitchfork, the bottom of the range is being held up by two major supports of two different pitchforks. So our midline in this pitchfork, which is very, very key, and then our band inside our bigger pitchfork, we are just chopping around in the band. And so what we are expecting is either for these support levels overall to hold and to continue pushing up, potentially up to the highs of the pitchfork around 141K to 145K, or a bigger breakdown. But I do want to give one word of caution here, because we are still looking at those range lows at 115.7. And why I am looking at those lows here. Let me just come onto this chart. Let me get rid of this and let's zoom in just a little bit. Let's do the 4-hour chart here. And if we're looking at that double 1-2 impulse, the one that I just showed you, a 1-2, 1-2, 3, 4, 5, 4, 5, something like that, right? We are looking at from the start of your wave 3 to the end of your wave 3, your wave 4 target often retraces between the 0.382 and the 0.5 Fibonacci. Now, hitting the golden pocket is an invalidation for that. But look at where we've chopped around that 0.382, and overall you can see it is holding as support. For the most part, we had a little bit of wickage underneath it, but overall for the most part that 0.382 is holding as support, and we are holding the midline as support. But that 0.5, which is a very, very common target, if we see one more push down to grab that liquidity of the lows into that 0.5, see that swing failure pattern, stop out all those late longers, and then being able to push back up above, that is the ideal situation that I personally would like to see in order to get that last wave 5 and then an internal 4 and an internal 5 push up to complete our overall double 1-2 impulse to the upside. So does that mean we are going to get it? No, it does not. We have two high time frame pitchforks that are holding as support, and they are really defending this Bitcoin from dropping. And I do think that if we start to close today's price action, today's daily candle above that value area high of our 2-week range, we might not come down and grab that liquidity. There has been times in the past within this bigger pump from 74K where we have not grabbed liquidity before continuing up. We had this range here. We had our range lows down here. We were holding, didn't come down, did not grab that liquidity of the range lows. We pushed up again. Now, in this range here, couple weeks long, just as well, we had our range lows down here. We came down, front ran it because the midline, front ran it because the midline. We did not grab our liquidity. We pumped up. So we could be seeing something very, very similar again, where these pitchfork midlines or pitchfork bands of support are going to hold us from taking our liquidity grab and we could continue pushing up without seeing that liquidity grab of the range lows, pushing up to our next major levels, 126 to about 130K, depending on how soon we get up, how quick we pump up. And so I would like to say it's just ranging. Play the range until it breaks. If you're a scalper, you can look for scalps within this range. You can turn on your volume profile, and you can analyze the high volume nodes of this range that we are seeing here. You notice here, anytime we come up towards the highs of the range, we are seeing rejections. Here it was a rejection from the value area high. Here it was a liquidity grab. And then anytime we come down to the bottom of the range, we generally are seeing that value area low hold as support. So, and then liquidity grabs of the lows as well there. So if you are interested in scalping this, you could scalp this, but be aware, if you're scalping the value area low, definitely take some profit once you get up to the value area high. Do not be greedy with your trades. If you're playing it as a scalp, play it as a scalp. Take profit. Yes, you can leave a little bit to run, but overall take profit. And then wait for the bigger move to play out. Make sure your stop losses are set. So if you're long and that bigger move goes against you, you're not going to get liquidated or too far underwater there. But while Bitcoin has been ranging here, holding as support, consolidating, squeezing tighter and tighter and tighter, we have seen a key thing happen in the markets that we have been waiting for months to years, really. And what that key thing is the Bitcoin dominance to finally drop and correct. And so let's go ahead and go into the Bitcoin dominance. I know I covered this in yesterday's video, and I covered it a lot recently here, but I do want to just briefly do a review on this. So this is our Bitcoin dominance chart, and really for most of the bull market, you can see that we've been trending very, very nicely since March of 2023. So over 2.5 years here. We have been trending up in this. This has been our bull market trend for the dominance. Bitcoin has dominated this market cycle. It has been the star of this market cycle. And, we were looking to hit up into the top of the picture, top of the channel around 65% dominance before seeing a bigger drop. We did get that bigger drop from the top. We called this short ahead of time. Now, you can't really trade Bitcoin dominance, except I think there's a couple exchanges now that you're allowed to. But midline held, we came up, we grabbed the highs of our prior highs, and then we saw our big drop. What is that? This is what we have really primarily been waiting for a mini altcoin season to start. The second we started losing this point of control here, we said game on for altcoins. We looked at the midline. If we lost the midline of this channel, we expected a drop to the bottom of the channel. And we are seeing a drop to the bottom of the channel, a small deviation of the bottom of that channel. But I covered this a couple days ago in my last couple videos as far as Bitcoin dominance goes. So if we zoom in here, our major prior lows were those lows that were around that 62%, 61.99% here. And we were looking to, if we did break structure bearishly on higher time frames, drop down, break those lows, that means we would be creating a lower low, breaking market structure bearishly. What we were looking for is a potential bounce from the bottom of the channel, coming back up to back test those lows. And if we did reject from those lows, we could see dominance really start to break this channel to the downside. Well, we almost got it playing out perfectly. What ended up happening is we lost those lows, had the low time frame back tested those lows. Let me zoom in here a bit, and let me make sure. Let's see, there we go. We'll make that a little bit bigger so people can see the screen here. All right, so we got that low time frame back test of those lows. You can see after losing those lows there, we came back up, we back tested them a couple times. Immediate low time frame back test, we rejected. So of course we're going to drop down and make new lows. Now we dropped down past the bottom of our channel, but we reclaimed it really quickly. What we're looking for right now, and I described this in yesterday's video, we are looking to really reclaim these prior lows here. These prior lows at 62%, if we can reclaim those lows, then we could probably see a bigger bounce on the Bitcoin dominance chart. And we were looking, if we go zoom out to the daily time frame again, we were looking for that bigger bounce to come up at least to our midline. You can see our point of control is going to be in pretty close confluence with our midline by the time we get up there. And that's going to be about 64.5%, 64.6%, where we could, now that we have created lower lows, let me make sure there we go. Now that we have created lower lows on the price action, we could look for a lower high. We're looking for our first change in market structure on higher time frames. On the daily time frame, we had been making higher, that's a lower high, but higher low. higher high, higher low, higher high, higher low, higher high. So bullish daily market structure. Breaking these lows was our first sign of a break in market structure to be bearish market structure on the daily. Now, our first test is going to be reclaiming these highs at 62%. If we cannot, we are probably going to break this channel down, and there's a potential that Bitcoin could drop, Bitcoin dominance could drop all the way to 55%, where our big weekly channel midline is. If not, if we can reclaim those 62% lows, then we might see that push up to 64%, where the channel midline is going to be in confluence with that pitchfork and the POC, excuse me, and we could see that bigger drop to continue either to range within this overall trend of the bull market, or to really lose this channel and see the real altcoin season come in. So for me, primarily, I'm going to be watching over the next couple of weeks. If Bitcoin can get above 62%, I do expect it to move up to about 64.5%. And that is going to be our key test to see whether the Bitcoin dominance is going to create that lower high, because now we've created a lower low. Now that we've created a lower low, as a trader, we can be looking for a lower high to come in, starting that overall bigger bearish market shift structure cycle, market structure shift to the bearish side. So we would see that lower low, lower high, then we would expect a lower low, and then that trend to continue, that bearish trend of lower highs and lower lows to continue, which if Bitcoin dominance is doing that, we know that altcoins are rallying against Bitcoin, and that is going to give us a lot of opportunity for an alt season. So yeah, I think, and we are seeing many alts being really bullish right now at really bear market lows or in their bear market ranges, and seeing big pumps over the last couple of weeks. Okay, guys, let me check the chat real quick here and say hi to everybody. Welcome in, everybody. Yeah, Archie TV, thank you. Guys, like the streams, please. If you get anything out of the stream, any insight at all to the market, please like the stream. Please share this with anyone you think would find it interesting. And welcome in. Awesome. Voice is crisp and clear. Thank you, man. I do have a good mic. I've got a Shure MV7 mic, so that's a pretty good mic there. All good. All right. Cool. Okay. Yeah, we'll look at Sui, crypto manipulation trader. We'll look at Sui. We'll go through a lot of the altcoins. There's not much to cover on Bitcoin. I do want to go over one more thing real quick on Bitcoin, but we're gonna primarily focus on altcoins again, because that's where our real opportunity is with the altcoins right now. One final flush down, Ludong. I am not disagreeing with that, and I will tell you why. We'll go over some of that, especially with like XRP. You know, we did hit into that $3 level of support, and I did short that 359, and I did take profit at $3, just like I said I would. But I am looking for a potential lower high to come in before dropping a little bit further. We'll cover that in a second. Archie TV, thank you so much for the super chat, man. Content is usually not free in 99% of channels. Yes, so like the stream, guys, support the channel. I thank you, Archie. You know, I do like to share my knowledge, and I truly believe if you put out good, you'll get good back. And so for me, it's not so much, obviously we need to make a living, and we can make a living off trading, but you know, I do earn revenue on YouTube ads, but it's like nothing, $200 a month off YouTube ads. And I know I'm a small channel still, but I don't do this primarily for the money. Let's just say that. And I try to share my knowledge for free so you guys can get a grasp of it as well. And hopefully this helps in some way. So thank you so much, Archie. I appreciate that. And I appreciate you seeing that. Love it when he just focuses on doing TA, no BS, just pure TA. Yeah, Ludong, you know, I love Jason Casper because he is so entertaining, and I can't be as entertaining as him, or I would be, because his streams are so fun to watch, man. I love it. And I've been part of the Casper crew for 6 years. I love the guy to death. I just do focus purely on TA because I'm just not that entertaining. And, you know, there's other guys out there that, like Andy, just focuses purely on TA as well because he's talked about it as well. He's just not that entertaining. I guess for us guys that are just more focused on trading, we don't have that kind of personality to be super funny and super creative like Jason. Yes, Mark Dutch, what's up, man? Thank you so much for joining. You guys, we got the best moderator in the game, Mark Dutch here. Thank you so much for joining. And yeah, Mark, I did make the numbers bigger. We're zoomed into 133%, so I hope that does help a little bit. Yeah, okay. I hate using cutlery, only Divine Hood's pitch. Yeah, I like the pitchforks too as well, Dutch, Mark Dutch. Let's see. Man, thank you so much, dude. Awesome content. Thank you. I appreciate that. Thank you so much for that super chat. That's really awesome of you. Let's see. Divine you rock. Humbaletti 1669. I appreciate that comment as well. So how do you get in the Telegram? I did start a Telegram group, guys, and I have been very, very busy this last week, so I haven't been able to post in the Telegram as much as I would like to, but I promise you I'm going to be more active in there. But the way to get into the Telegram, in all the links in all the descriptions of my videos and even in this live stream, there should be a link to join the Telegram. But in order to join the Telegram, you do because I partnered with BYDFI to join. And BYDFI is a KYC free exchange and a VPN free exchange. So I did this partnership with them because it's a win-win situation for all of us. So obviously I'm an affiliate of theirs, and so I do get a little bit of kickback of your guys' trading fees. When you guys trade on the exchange, I make a small percentage of the trading fees that you make. Uh, Other than that, I do not get paid at all from them. It's just trade. I make a small percentage of the trading fees from your guys' own trading. But if you sign up under them, you don't even need to KYC. If you just sign up with an email and a password and you deposit $100, first of all, you'll get a $50 deposit bonus. So that's a 50% deposit bonus on just depositing $100. You will get a 17% discount on your trading fees. And then if you do that, you can click on the Telegram group and you post your user ID and you can get access to the Telegram group where I do post trade setups and I try to keep you guys updated on what I'm thinking in the market in there. And so the link's in the description for that. Once you sign up for the account and deposit the $100, it's first of all, it's your money to trade with. You're not giving it to me. It's yours completely. You can trade with it. You can keep it in there, do nothing with it. You can get your $50 deposit bonus, all that stuff. But once you guys sign up and get actually in the $100 in the exchange, all you do is you go into that Telegram group and you hit /verify and then your user ID, and it will automatically put you into that Telegram group. So then you guys can get access to whatever I post in there. Okay, let's see. Yeah, investment time. Thank you guys. Thank you guys. Chainlink, the Chainlink ripple effect is real. Yeah, guys, Chainlink hit that key level of support that I've been talking about, and I'm long on Chainlink right now. I longed it, and I'm in profits right now. We'll cover Chainlink, we'll cover Sui, we'll cover all the major altcoins. Okay, let's go ahead and get started here, guys. Let's go back to Bitcoin and we'll talk real quick about Bitcoin in this range. I mean, there's not a lot to update on Bitcoin. You know, we're squeezing together within a smaller range, trade the range until it breaks, but a big move is coming soon. We do see a big move coming soon, and it looks like we might reject here from the value area high. We're starting to roll over on money flow, and our momentum waves topped out on the hourly. So I would not be surprised if we roll down. Now, check this out though, guys. I think that we could see a scalp long position from our POC, which is going to be in confluence with that pitchfork band at about 118K. Let's pull a local fib here and let's look at our golden pocket. Yeah, your golden pocket's also going to be there. So you see, even if looking at a scalp trade, now if I'm going to take this scalp trade, let's diagnose this here. Remember, we're playing this as a scalp, right? This is nothing more than a scalp, so do not get greedy. You could leave a little bit to run, but if we're playing this as a scalp, you can see here, just today, we've created that high, the high earlier today, and we are creating lower highs here, like just barely lower highs here. So if we do decide to reject from this value area high and roll down a bit, you know, maybe bounce from the VWAP, come down, lose the VWAP, back test the VWAP, and work our way down to this golden pocket. Well, that golden pocket at 118K is going to be in confluence with our range point of control. It's also going to be in confluence with our pitchfork band, our pitchfork midline that has been holding. So what we can look at is if this is going to bounce from this area, we can look at taking a long position from this general area. Now my stop would go below this local low, our last local low, the back test of the pitchfork midline here. And then I would be just targeting the value area high again. I would actually be targeting a liquidity grab of earlier today's highs or that daily, you know, that fresh daily up at 120K. That's going to give you a 7.26 risk to reward ratio. And even if you wanted to be a little bit more conservative with this, you could wait for the bounce to happen. So you could wait for the bounce to happen, and then you can enter a little bit higher in here and then put your stop even below. I would still keep my stop below this low. That's probably the technical low. You want to keep it underneath. But that's still, even if you enter here, your stop goes below that low, give it a little bit of breathing room. That's still a 4.5 risk to reward ratio just to come up to target those, about a 4-to-1 risk reward ratio just to target those highs from earlier today. And then you could even leave a little bit because we might break this. We might break out and start heading up much higher. So this is the way you can play scalp trades, but don't get greedy, guys. If you're playing this as a scalp, for me personally, if I play this as a scalp, which I might, let's just go ahead and set an alert down here. Let's set an alert right before that area. No, okay, let's do right in here. Add alert there, and we'll just, if we come down there with some lower time frame bull divs on the chart, we could look for a potential long there. And the reason why I'm going to be prioritizing longs, I'll tell you guys in just a second here. But what I would be looking at, if I'm going to take this long position, I'm playing it as a scalp trade. I'm not going to get greedy. If we come up to the value area high and these highs, I'm taking 75% out, whether I think it's going to continue or not. I'm taking 75% out because I'm playing this as a scalp trade. And you cannot get greedy in scalp trading, and just be happy with what the market gives you, because we could continue to rotate in and out of this until we come take our range lows. You never know what's going to happen here. So just be aware. If you're playing it as a scalp, don't get greedy. Take your profits. Leave 25% to run just in case you explode up. But the reason why I am primarily bullish on Bitcoin, if we go into our order flow chart here, and this is our order flow, coinalyze.net, and we look at this range that we've been in for the past 2 weeks, you know, this pretty much this overall range right here. And even really from our range lows, that 115.7K range lows, you can see here that we are making higher lows on the price action. We are making lower lows on our CVD. Now, what is CVD? CVD is cumulative volume delta. It's pretty much aggressive market participants. Market participants either shorting or longing the market. And we know that active participants are usually what moves the market on a daily basis. So if we have our CVD overall, our overall trend is decreasing on CVD, that means that most of the traders, the active traders since that low, have been shorting the market. Now, they've been shorting the market. Some of it has been positions getting stopped out. That's why you'll see these big drops in open interest. It's really positions getting stopped out or liquidated. But for the most part, we've had people, participants shorting the market, yet Bitcoin is not making lower lows in price. So there is some bullish divergence as far as CVD goes. And after this CVD bullish divergence builds up, you can often see that last higher low coming at a golden pocket, like at this level right here, where you could see then that bullish CVD divergence play out, and you can see your big break to the upside. And what I'm looking for now, this is not, I will say this is not the nicest bullish CVD divergence we've seen. It's a very nice divergence, but what you really want to see for a really good signal is what's called bullish absorption. And what bullish absorption is when you have big whales that are in the market, and you have a bunch of smaller minnows or smaller traders that are shorting the market, actively shorting the market, but their market shorts are being absorbed by a big limit long order. They're loading up their bags to squeeze to the upside, to break to the upside. That's the fuel they need to push to the upside. All these market shorters that are shorting this range, they're going to use them as fuel for the next big short squeeze to the upside. And what you want to see generally in a short squeeze to the upside, in a bullish absorption short squeeze to the upside, is your open interest from that key low. So if we go ahead and come in here and we just take our vertical line, and we throw it right on that area. So from this key area in the open interest, generally you want to see your open interest increasing steadily to the upside for bullish absorption, because you cannot absorb positions if there's not new positions to absorb. What open interest is just the amount of positions opening or closing in the market. If open interest is going down, then people are overall closing their positions in the market. If open interest is going up, people are opening up new positions. Now you can determine what positions they are based off the CVD. So locally here in the past 3 or 4 hours, actually 5 or 6 hours, you can see that our CVD has been slightly increasing here, and our open interest is increasing. So we have had some longers stepping in today. We've had some long stepping in today. And then towards the top, we've had some fresh shorts stepping in into our golden pocket lower high, which or the value area high, which is to be expected. But overall, because of this bullish CVD divergence, not absorption, but divergence that we are seeing on the charts, we do still have to pay attention to it, is even though it's not as strong as a signal. You know what? An absorption signal plays out about 80% of the time. One of the best signals you can get in the market for bias on your trades. Now, CVD divergence with a drop in open interest, not near as viable as a trade signal, but it still can give you a little bit of a bias here. With our bullish CVD absorption that is occurring on the charts, plus our double 1-2 impulse to the upside that we've from the 98.2K lows, my bias overall is for higher on Bitcoin. And that's why I am still prioritizing long positions. So the two long positions that I'm interested in on Bitcoin locally is this 118K scalp long, and then really just taking out the range lows at 115.7. SFP of those range lows, grabbing our liquidity of the past 2.5 weeks of price action. You can see all that liquidity that is resting below the range lows there. And those are the two longs that I'm interested in. Other than that, I am not interested in anything else on Bitcoin. Shorting, yes, we can look at shorting that daily and SFP into the daily around there, but really not too much else. Okay, guys, let me go through the chat and then I promise we'll get into altcoins here. Just wanted to describe why I'm prioritizing some longs locally here. Okay, so we got Sui, we got Chainlink, I'll go through some of those here. I will sign up. Okay, cool. Humble Eddie 1669. I'm glad to hear you're going to sign up. Bat Keto, thank you for sharing your wisdom with us. I'll make sure to send you some support. Thank you, Bat Keto. I appreciate that. And thank you for that kind comment. I'm glad that I'm your favorite trader on YouTube. Yeah, I do generally have all the trading levels. I mark out all the key levels and then I find the confluence on those levels. And that's where my real interesting trades are. So isn't there a lot of upside in BTC versus alts right now? Well, right now is if you look at dominance right now, we are seeing a little bit of a push up in dominance. So yeah, BTC is rising, and actually not today. Like today, we've been dropping in dominance. So altcoins are rallying against Bitcoin. But over the past 2 or 3 days, we've been seeing altcoins drop and we've been seeing dominance rise here. So yes, Bitcoin is making a little bit of a recovery against altcoins, but that's just because Bitcoin dominance saw such a big drop. Nothing's going to go straight down forever. We expect to see small bounces to create lower highs before continuing the overall bearish trend bearishly on higher timeframes now that we're starting to change market structure. So ebbs and flows in the market there. Yeah, ready to go. Yeah, don't leave money on the table. I mean, I do think a lot of the alts are ready to go. We're either going to see a failed alt season in the next couple of weeks and like a really bad drop on some of these alts, or we're going to see a giant breakout on a lot of these alts, and we're going to come up to some of those bull market top levels that we've been expecting for years now. So honestly, we're at a very, very key stage in the market here. What's up, Curtis J? We will look at Cal protocol. So let's get into some of the altcoins, guys. No more delay. Let's get into the altcoins. I'm going to go into Ethereum real quick here. We'll go into some of the major stables and alts. And then as soon as we're done with that, we'll get into I'll cover Sui, Solana, Saycoin, like the ones that I cover in my normal daily videos. We'll cover those real quick. I'll only spend about 5 minutes on them each. And then we'll go into some of your altcoin requests that you have in the chat here. We'll try to get it through as much as possible. But let's talk about Ethereum. So I'm going to hide this range real quick. Ethereum, guys, we have seen, let's zoom back out onto the daily, and we are looking at this bigger pitchfork, right? This bigger pitchfork was our bear market lows of 2022 up to our cycle highs down to our cycle lows. And you can see that we have now just worked our way up through this pitchfork, right? We have come up, we found a range within that lower band. We were able to hold that range, break above our midline, back test our midline for pretty much a couple months before seeing that bearish catalyst. We lost it, but we came down to a key level of support. So you can see it was our anchored VWAP from the lows of our cycle. But also, if we pull a golden pocket, now this is where a lot of people are going to get confused, but our last range lows, we never took the liquidity of this range low down here, this candle within this smaller 2-week range. We never took that liquidity. So those range lows are going to be important swing lows, and we're going to bring it up to our range highs of our next range, which was this 2-month range right here. And where did we bounce? We bounced right at the golden pocket. You can see that golden pocket because it was from a swing low to a swing high, from our prior range lows to our new range highs. We drop back down, we lose the midline. You can see once we actually start to close a daily candle below that midline, woo, straight fall down. to the golden pocket. Wick to the golden pocket, but closed the daily candle at the anchored VWAP, showing strength, showing that the overall volume weighted trend, the volume weighted bullish trend was holding as support. That told me right there that Ethereum wanted more upside. And so we looked at that long from that position. I got it a little bit higher. We even came up, back tested the midline, rejected, but held a higher low, and then was able to kind of form that triangle in here where we then exploded to the upside. And what happened, guys? We exploded up to our upper band. And once we hit into our upper band, I did talk about this. I said we are probably going to find some consolidation in and around this band, just like we did down here. Well, we ended up busting all the way through it. And what I would like to show you guys here, really bullish. And if we're looking at the bigger double 1-2 impulse, just like on Bitcoin, we're looking at a big impulse on the daily time frame from 98.2. Well, we're looking at a double 1-2 impulse on Ethereum as well. So we have our 1-2, 1-2, or actually what I'm actually not this smaller impulse now. That smaller impulse is actually already finished. That was just this push up here. We're looking at the bigger impulse now. So from our lows to our highs here, we're looking at this as a wave 1. We're looking at this pullback as a wave 2. And then if we're going to explode up in a wave 3, well, where's your wave 3 projected to end? It's projected to end at the 1.618 Fibonacci extinction target. And I showed this to you guys about a week ago, but if we do our trend-based Fibonacci extinction, let me just come in here and get rid of these brushes. If we do that trend-based Fibonacci extinction and we just go from the lows to the highs to the lows, and we turn on that 1.618, and then we take it and turn it off log scale, then you can see that 1.618 is coming in exactly at the top of our key pitchfork, our key bullish pitchfork that has guided us this entire impulse up from $1,400, from $1,300. Every major level in this pitchfork has been a key level. So what about seeing this continued push up from 2,100 all the way up to 4,500 with some red candles? I did say we would see some red daily candles. We would see some consolidation in this impulse. It's to be expected. But this overall push up to 4,500, then seeing a wave 4 retrace. Now your wave 4 retrace is generally going to be longer than your wave 2. So maybe 2 months or more of a sideways and down corrective move, hitting into the bottom of the band or the top of the band before continuing that wave 5, pushing up, breaking new all-time highs, maybe 5K, 5.5K, seeing something like that. That is kind of what I'm looking at for Ethereum over the next 4 to 6 months here. But zooming in locally, let's zoom in now to the 2-hour time frame. You can see what happened here. And let me just hide this real quick, this trend-based Fibonacci extinction. We hit into the lower part of our pitchfork band. That's this area here. Now, we rejected, but we barely rejected, and then we broke above it. Now, when we broke above it, I gave in the Telegram to long this area. We longed the reclaim of the pitchfork. What was resistance the day before here was now flipping into support here. So we took a long from that area with our stops below those general lows, below those local lows. Let me get in here and zoom in so you guys can see this a little bit better. And let's just go on to the 1-hour chart. So we took a long in this area upon the reclaim of the pitchfork band. We longed just right in here with our stop below that last local low. And we were bringing it to the upper band. Once again, playing it as a scalp. I took profit completely on that trade when we hit into the top of the pitchfork band. I did not risk it. I said, you know what? We have resistance there. It was a 5.5 risk to reward ratio. We took that trade. We won that trade. Now, sure, could we have kept going higher? Absolutely. And should I have left some to run? Maybe, yeah, 10% left to run just in case. But we did get that small pullback from the top of the pitchfork band. We were able to create another higher low. You can see our prior highs are now being flipped to support. Here, prior highs now being flipped to support, continuing the bullish trend, breaking above it. Now, the other day, I gave a long position backtesting this pitchfork band. We had backtested this pitchfork band, bounced, and then right in this area, I looked for a long. Unfortunately, we were looking to come up to that daily and we failed. I did take a TP1 once we lost the VWAP, so it was pretty much a break-even trade for me. I think I made like, a 0.25% on that trade. But that's why we set our stop losses to break even, or you just pull out of the trade if you start to break, in this case, it was the VWAP for me. Once we started to, we tried to get above the VWAP, we couldn't, we lost it and then back tested it. Once we back tested and rejected, I said, I'm out. I'm out. It's probably going to fail. So there you go. We drop back down. But what happened here? So this is what's key here. Anytime you have a high like this on very bullish market structure and your high is done, we know because we're looking to come up to 4,500 for our bigger wave 3, but your bigger wave 3 is not going to continue straight up for days. You are going to see small corrections. Some of those corrections might last a day or a week. So we're going to take our trend-based Fibonacci extinction. We're going to go from our highs to our first lows. And the reason why we're choosing these lows is because we broke market structure bearishly. Let me show you guys that. So this was our prior last hourly low, right here, right? And so if we break this low, that is going to be a market structure break on the 1 hour time frame, a bearish market structure break. So if we break this bearishly, then we could be looking now for a lower high to come in on the charts, for a rejection on a lower high, for another leg down, for another lower low, to change market structure bearishly on lower time frames for a lower time frame correction. And the reason, and so we were looking, okay, if we are going to see that lower low, we broke market structure bearishly, we got the lower high. If we are going to be looking at this as a 3-wave corrective move, then where is your target for that corrective move to end? And that's when you pull that trend-based Fibonacci extinction from your high to your low to your lower high. You're going to turn on your ABC correction targets, which is between the 1-to-1 and the 1.236. Well, where did we bounce? We bounced right at that 1-to-1 target. And once we bounce from there, I did say if we reclaim this pitchfork band, we could potentially shoot up to that daily. And then yesterday I marked out this level of resistance because this is going to be our, if we turn on that range, if we just pull a range of the past week or so, it's going to be the point of control in confluence with our golden pocket from highs to lows. You can see our golden pocket POC is here. So this is our resistance. If we break above this, I do think we're coming up to that daily. If we reject here, I do think we're going to continue down to the bottom of the pitchfork band at 34.15-ish, 34.14. Potentially even lower, coming to take out these lows at 33.09, 33.15 or whatever. So we are bouncing from our 1-to-1 target. Now, the only thing that's got me a little bit concerned here on Ethereum, I'm going to delete this range now. I'm going to delete this golden pocket just to clean up the chart. And I'm going to delete this 1-to-1 Fibonacci extinction. The only thing that's got me a little bit concerned here is generally you want to see a 3-wave corrective move down here. Now, I could absolutely see this as a 3-wave corrective move, but you also can count this as a 5-wave move down. If you look at this being your wave 1, this is your wave 2, your wave 3, wave 4, wave 5. So if that's a 5-wave move down, then you're looking for a 3-wave move up, generally rejecting from your golden pocket, and then you're going to look for another 5-wave impulse down and a bigger A, B, C to the downside. So there is a potential. Now, this as a 5-wave impulse looks really crappy. To me, it looks really crappy. So I am leaning, there is a small possibility that this overall correction isn't done. This whole thing was an A wave. We're pushing up in a B wave, and we're still going to see a C wave coming down to the bottom of the pitchfork band. But overall, there is a potential that our 3-wave corrective move could have ended, and now we're about to rock it. And that's what I am banking on. I am long, by the way. But if we do start to reject from here, I will pull profit. Actually, I did take profit exactly at the 0.65 golden pocket at what, 37.44, whatever that was, 37.37. I took profit there earlier today on a long position. So, and I have not attempted a short yet, but I am interested in a short here. If we do start to, I haven't seen enough here yet to short. And actually, to me, it looks like we might break through this. But this is kind of what's going on for Ethereum. Now, if Ethereum can break above this golden pocket, I do think we're probably going to run to that daily. And then, honestly, overall, though, guys, I'm looking for Ethereum to come up to 45.35 over the next month or so, a couple weeks to a month. We should see Ethereum continue in this wave 3 impulse all the way up to its 1.618 target, which is our key target at 45.34, which is also the top of our bullish pitchfork. That is it for Ethereum. Now let's go ahead and go on to Solana real quick. Guys, Solana is very, very simple. Let's zoom out onto the daily chart. we've been in a range since March of 2024, those key highs in March of 2024, ranging sideways. This deviation of the range was because the Trump meme coin shenanigans, busted up to new all-time highs, tried to hold the value area high, made a new all-time high, and then we dropped all the way down. But overall, our general range on Solana has been between this value area, right? So anytime you're near the bottom, you're considered undervalued. Anytime you're near the top, you're considered overvalued, and this is fair value. Well, we broke down below the value area low. We were able to reclaim it, back test it, get above the POC, back test that. We came up and we had front run the value area high here. So, and then we were looking at a higher low because we had broken market structure bullishly in this impulse up. We were looking for a higher low to come in. And where's your most common target for a higher low? The golden pocket. If we pull a Fibonacci from the lows of the impulse to the highs of the impulse, where did we land? At our golden pocket. We bounced from our golden pocket. That right there should have given you a bullish that we were going to make a higher high overall on the daily time frame. Potentially seeing your wave one. Oop, let me back that up. Your wave one here, your wave two here, and we could be in a wave three continuing all the way up to 275. Then see a 4-5 here, to finish it off, maybe for the bull market. But bouncing from our golden pocket and near the value area low, I expected us to come take the liquidity of these highs into our resistance. Now, what is this resistance? Let me get rid of some of this small stuff here. I'm just going to hide this because I want to talk about this in a second. So that resistance that we're looking at was our logarithmic golden pocket. If you take a golden pocket from our all-time high in this case down to our lows that we saw at $95, and you turn on the golden pocket, but because it's more than a 30% move to the downside and we are on the logarithmic chart, you have to come into settings, you have to choose based off log scale, and now you can see that logarithmic golden pocket is a proper 61% retrace, and that log golden pocket was in confluence with our value area high of our year-and-a-half long range, and this was the general area where we were expecting a bit of a pullback. Now, when altcoins get busting, they'll wick a little bit past that level, get everyone to long, and then they drop right back down. So it's not a surprise to me that we wicked a little bit past that. We also had that naked monthly point of control at $200 pretty much. And so right up there between $189 and $200 was kind of the area of resistance we were looking at. We had a naked weekly, a naked monthly point of control. But I've been saying for the past week on this chart, if we lose $189, which is the value area high, it's not going to look good. Well, you guys can see we dropped down below, back tested it, rejected that value area high, made a new low. Now we're coming up again. We're back testing that value area high. If we reject again, I expect a new low to come in. And actually, I expect a new low. I talked about this in yesterday's YouTube video. But if we are looking at our bigger impulse to the upside, our trend-based Fibonacci extinction, our double 1-2 impulse to the upside, just like with Bitcoin, from our lows here at the golden pocket at $127, we do see that sort of a double 1-2, a 1-2, 1-2, and then this is the start of your third wave, right? This is the start of your internal third wave. And then if that third wave is ended and we are going to see a fourth wave correction, then generally you see a 3-wave corrective move down to between the 0.382 and the 0.5. Well, I was saying that we were at least going to come down to the 0.382. We did that yesterday. You can see we came down, we bounced from around that 0.382. But in yesterday's YouTube video, I said the main level that I'm watching is the $175 level of support. Why am I watching that as support? Because it's our 0.5 Fibonacci, which would be your wave 4 target, your secondary wave 4 target if we're going to see a 3-wave corrective move. But it also, if we're looking at this entire impulsive structure to the upside, from our 127K lows, let me get rid of these, and we do a Fibonacci pull from our 127 lows up to our highs, and we turn on our 382, which the 382 acts as support or resistance in a strong trend. So far, I would call this a very strong trend. Now, if you want that trend to continue, generally that 382 is going to bounce you. So we are expecting, okay, can we find confluence with that 382? Well, your 0.5 wave 4 target is in perfect alignment with that macro 382. And so that is where I expect if this double 1-2 impulse is going to continue and we got a couple more highs before it finishes, then 175 could be our level of support where we look for a potential swing long to bring all the way up to maybe 232, this area up here, where we have naked weeklies, monthly levels. We have a bunch of resistance up in that area. So that could be where the impulse ends. This whole impulse ends here, and then we're going to see a bigger retrace to backtest that macro value area high before continuing higher. But on Solana, we do not want to lose this value area high, because if you peek your head above the value area high, you see a little deviation above it, and then you fall back inside of it and then backtest it and reject, you are expecting lower. Now, 175 is my first level of interest where I'm really looking for long, but we might drop a lot lower. We might drop to 164, where your anchored VWAP from the all-time high is. Might drop all the way back down to your point of control. That is almost a worst case scenario, but if you deviate that value area high, you reject and you fail to break out and you fall back within, there is a high chance that you could rotate back down to fair value, and that is fair value. And then if the market is still bullish on Solana, then buyers will be willing to buy up at fair value. So you'll get that big push up again from fair value. But if you reject from overvalued, then you might see a rotation back down to test fair value again. That's just the way the market works, market auction theory. And so Solana, I'm not long on it yet. Now, if we bounce from the 382, because there is a potential this low is in and we're about to skyrocket. If it is in, I'm not convinced yet. But if it is in, once we reclaim 189, then I will play this conservatively. I will look for a potential long from around that 189 area. My stop would go below our lows, and I would be targeting that 230 level. That's still a 3.5 risk to reward ratio up in that area. And you would just adjust your position size because you're using such a large stop loss here. Your position size is just going to have to be adjusted for that. And that would be a trade that I would be interested in trading in. Okay, that's about it for Solana. Let's go on to Sui. Okay, Sui, guys. Sui, the last couple of days, I've talked about this. I've wanted us to see that, once again, the same kind of impulse that we've been in for a lot of these coins, these double 1-2 impulses, 1-2, 1-2, then this is the start of year 3. That's your 3 there. Now we're looking for a fourth wave correction down before a 5-4-5, right? Before your 2-4-5s in. Now, if you're looking for that 4-5-4-5, now your fourth wave is going to be a 3-wave zigzag move down. Earlier in this week, last week, I think it was last Tuesday, we rejected from right in here, the golden pocket right here. And I warned that, guys, we've changed market structure bearishly. So let me actually clean up this chart a bit. Let me get rid of this range for a second. Let me get rid of this for a second. So what happened is our change in market structure was taking out these lows here, right? You break those lows, you break market structure bearishly. So we had broken market structure bearishly. Now that we had broken market structure bearishly, you could see we had also front run that macro 382 Fibonacci support level. But because we'd broken market structure bearishly, we were looking for our lower high golden pocket for a B wave rejection before seeing a C wave down, seeing your ABC down, your 3-wave corrective move down. So you take that Fibonacci from the highs to the lows, you look at that golden pocket area, and where did we reject? That golden pocket area. You can see we wicked up past it a little bit, but that was our overall rejection, was the golden pocket area. And that is your most common area to form a lower high before creating that third wave down and a lower low. So what was this? Monday, it happened last Monday. I covered it in last Tuesday's stream. I said, guys, there's a high probability that because we are rejecting from this golden pocket, that we do see one last flush down to come take out our range lows. And we were looking at those range lows at 365. I did say if we get an SFP of those range lows, I would be interested in longing it. Now I have not longed that. I missed it. I would have probably longed the reclaim of that if I saw it. Let's zoom in onto the hourly chart. So, and it wasn't a clean SFP either, guys. It wasn't really a clean SFP. We did get a clean SFP here, but a lower high and then one more push down. But because we rejected from this golden pocket, we were looking for another lower low to come in. We also did not hit our 382. We had front run our 382. And remember that wave 4 target is generally between the 382 or the 0.5. Those are your general levels. Now, I really do like this 0.5 Fibonacci because it's in confluence with our macro POC of the last 5-6 months of price action. So let's go ahead and zoom out here a bit. let's go onto our daily chart, and on SUI, you can see this big range. It's all the price action within this descending channel. So we had our initial, like, I think this is the all-time high, our all-time high created on SUI. Then from that area, we had our multi-month corrective move down, and then we had our lower high. But this push up was an impulse. You can see it was a very clean and clear 5-wave impulse. Because this was a very clean and clear 5-wave impulse, we were looking for a higher low to come in on the charts. And this is why I had this spot buy area down here, because we were looking for a higher low to come in on the charts. For now, this would be your overall bigger wave 1. This would be your wave 2. You could see a wave 3, 4, 5 to make new all-time highs to finish SUI for the bull run, or to finish it at least for this big weekly impulse, this bigger weekly impulse. So because this was a 5-wave impulse, we pulled our golden pocket from the lows to the highs. Now, because this is more than 100% move up, you have to change that to log scale. You turn that on log scale, you can see where did we bounce? Exactly, not only at our channel midline, let me hide this range for a second. Channel midline held perfectly in confluence with your logarithmic golden pocket. Now we're starting to impulse up here. Okay, so that right there shows you that SUI could be about to break out to new all-time highs. Not that guy. Oh, there we go. All right, so, but now with SUI, you can see this is our key volume profile, right? Of the past, since November, so past 7-8 months here. And our key descending corrective structure on the daily time frame. This is our daily corrective structure, this descending channel. So if you start to break out of that descending channel, you back test it, you can expect to continue pushing up in an impulse. Now, we still are in the process of back testing it. It's going to take a while because this is a daily time frame, and oftentimes you'll form a range in here to really let the market decide whether it's going to continue breaking out or it's going to break back in and really see a bigger drop. So we are in that little range. And within that range, we have seen that 3-wave corrective move down. If you look at it on the daily time frame, it's very clear. Push down, retrace to golden pocket, push down. There's your 3-wave corrective move. And generally, your wave 4 correction lasts longer than your wave 2 correction in here. So that also now has hit the case. If we were just looking at this push down, that was shorter than this. So you needed some more time for that correction to end. But we took our range lows. We are breaking back above the pitchfork, not the pitchfork, the channel breakout, the top channel trend line. And if we zoom in now onto the hourly chart, what I'm looking at here, let me get rid of this break in market structure. And let me just hide this real quick. And we'll get rid of these ranged lows. So now what I'm looking at, though, is because we have seen that bigger push, that 3-wave move down, I do not like how we front ran this point of control. And I think there's a possibility we could drop to this point of control. We are also below the value area low. If we pull our range and we look at this range that we've been in for the past 2 weeks, we're actually back testing the value area low now. But if we pull a golden pocket from our B wave highs to our C wave lows, and we turn on our regular golden pocket, you can see our golden pocket is right where we're at now. And if we are going to reject this general area between 387 and 389, and that was also, I think, our value area low was a little bit closer to that yesterday. That value area low was there. And so that was our confluence. If we were going to be able to get back inside the value area low and above this golden pocket, then we can expect probably to push up to new highs, up to that at least 430, but probably 441 to 445, where we have our next major resistance, the macro value area high. And we also have our naked weekly point of control up there. Naked weekly point of control, 441. But if we do reject from this area, then the bearish trend is more likely to continue. We had our lower high rejecting from a golden pocket. We had a new low, another lower high rejecting from a golden pocket, and then we could probably create a new low coming down to your point of control. So right now is the key back test that we're at. I did long earlier and I took profit exactly 387. I took 50% out and I will leave the rest to run. I will either get stopped out at break even or I will continue to hold it to push up to higher prices. So that is what we're looking at here. Oh, what is this? What did I just do? Okay, that is it for Sui, guys. If we reject in this general area, I expect to move down to 347, which is where that Fibonacci 0.5 Fibonacci in confluence with our macro POC. Because we did front run it a little bit, there is a possibility we could come down here still. We break above 389, and I think we do have a pretty clear shot up. Now, one more thing to look at is you can take a golden pocket from the highs of the corrective move down to the lows of the corrective move. And that golden pocket is going to be pretty close to your point of control. So that could be a little area of resistance up in this area here. But I would really say if you break above this golden pocket, there's potential that we come up and break to new highs. Because you also got to remember, we would also be holding, we're ranging right now, about to break out of the bigger channel. If we hold this range, the probability is to continue breaking up. That's our trend. Trend is your friend until the end. Okay, guys, give me just 1 second here, okay? I've got to respond to this text message. This is an important text message. Give me just a second here. Okay, guys, I'm back. Sorry about that. Um, all right, so let me read the chat real quick, and then we will get back to the charts. Okay, where was I at? Minehood, all trading levels. Oh, I missed Mildly Gorgeous super chat. Okay, where was that? Mildly Gorgeous. Oh, Mildly Gorgeous. Thank you so much for that. Yeah, that's the super chat. Thank you so much. I really do appreciate that. Let's see. That's yeah, Mildly Gorgeous. Thank you so much for the $50 or 50 euros. That's a really big super chat, and I really do appreciate that. And Mark, thank you for highlighting that for me. I can't believe I missed that. And you didn't want to look at a coin or anything. You just want to say thank you, and I appreciate that. Thank you, really. Thank you for tuning in, and thank you for that nice super chat. Okay, Cow. Yep, we'll look at Cow. We'll look at XRP. We're gonna go into XRP in just a second here. Let's do yeah, Chainlink, Cow, XRP. We did Solana. Okay. What's up, Quiles? How you doing, man? CRV, we'll do CRV as well. CRV, I'm just waiting for it to come down to 86 cents, really. I'm hoping 86 cents comes, 89 to 86 cents, and I'm planning to long the crap out of that. But Sui, now Say, we'll cover Say real quickly, guys. Yesterday in the video, I talked about it. So if you want to go in depth on Say, watch my video yesterday. But we rejected from the high of the pitchfork band, and it was our log golden pocket at 38 cents. We had longed 24.67. We had longed the back test of the pitchfork midline here. We bring it all the way up to 38 cents. We expected a rejection at 38 cents. We formed this range over the past 2.5 weeks. We've lost our pitchfork band now. So because we had lost our pitchfork band and our value area low, which it's changed, but if you take this volume profile and you pull it back to here, we had lost our value area low and back tested it. You know, bounced here, lost it, then came to new lows. We took our range lows. We were looking to come down to take those range lows. We've finally taken those range lows, and now we're seeing a push up, and we're seeing a push back into our volume profile. That is a good sign. So I'm looking really, honestly, this thing could be done with its correction, and we could push up. It might not be done. We might continue down. So you can take your Fibonacci from the highs of the corrective move to the lows of the corrective move. And that golden pocket's going to be coming in right around the value area high. So if we are going to see a bigger 3-wave corrective move, which is possible, let's zoom out on this onto the 8-hour. Guys, we've been pushing up through this pitchfork. You know, we bounced into the bottom of the pitchfork. We rejected from the pitchfork band at first, reclaimed it on low time frames, pushed up to the midline, saw a rejection from the midline. Let me just zoom out to the daily so this is easier to look at. saw a rejection from the midline, chopped all the way back down to back test your band as support. Bounced from your band of support, got above the midline, back tested the midline as support, pushed up to the upper band. The upper band is rejecting us, and now we're starting to lose the upper band. So if we are starting to lose the upper band, we can look at, first of all, pull your Fibonacci from your last lows on the pitchfork to your highs. That golden pocket coming in around 30 cents to 29 cents. We did just barely front run that golden pocket. There's a potential we could come down there still to backtest this golden pocket here. But we grabbed the range lows and we're above the range lows and we're above the value area low of our range of the past 2 weeks. So there's a potential that we could see that bigger 3-wave corrective move. This is being an A wave down. We could come back up to that value area high golden pocket right around 36 cents. And then we could see one more push down to actually hit that 30-cent golden pocket, 29 to 30-cent golden pocket. And that could be an area where you long to look to take up to the top of the pitchfork around, 48 to 50 cents. By the time we get up there, it's going to be really closely aligning with our weekly level up here. So overall, I'm still looking for say to continue, but we did see bear divs on the daily. Lower highs on the momentum waves, higher highs on the price action. Bear divs, money flow is now draining out of the asset here. So we could see a bigger retrace on say. Now, we've grabbed liquidity locally, and I do expect a local move up from this liquidity grab. So there's a couple things. Today, we're going to want to close our daily candle above 32.5 cents. That is your value area low. If you do not close your daily candle above 32.5 cents, you're in trouble. You're probably going to keep dropping straight away. If we close it above 32.5 cents, there's a couple levels I'm looking at. So the point of control of this range is going to be pretty close to this pitchfork band. Now that we're losing the pitchfork band, it's going to act as resistance, just like the upper part did. Now we're losing the lower part of the band. The lower part of the band could act as resistance. So watch for that. And if, or like just a little bit of a wick past it to the POC and then an instant rejection. And if we can get back above that band and above the POC, then we expect to move to the value area high, which is right around your golden pocket, and that could be your rejection before coming down. So that's kind of what I'm watching for say. Overall on say, we are seeing daily bear divs. If we zoom out onto the 8-hour, we were seeing those bear divs on the 8-hour chart. You can see here, lower highs in the price action, lower highs, in the momentum waves, lower highs, momentum waves, lower highs, momentum waves, higher highs, price action. Money flow had been draining out of the asset here and is about to cross over. We did get that good 8-hour green dot, and we are taking the range liquidity. So our key today, just know this, if we close above 32.5 cents, then we're bullish. If we close underneath it, we're probably dropping more. This 32.4, I would say. And if we do, we have a potential to work up to 36 to 36.2 or 36.3 cents, this general area here. That's about it. And then if we drop, I'm expecting to come down to that 30 to 29 cent golden pocket below us. We'll see what happens once we get there. If we're creating some bull divs along the way, then you will look to long that golden pocket. If we lose that golden pocket, unfortunately, we're probably going to come all the way back down. Like you could pull a Fibonacci again, and actually we can pull a range from this guy here, even though it's 2 ranges. But that POC, you can see that POC is going to be really close to our golden pocket. Actually, not really. Let's see. That's going to be your 786, though. 786 is going to be close there. So I would look for between the POC and 786. If you lose 30 cents, then that's your next area. But say overall, we did say that once we hit up into 38 cents, we were going to see a bigger correction to the downside, and we're in the process of that. You can't expect to keep busting through. Like, look at the last time we hit up into the pitchfork midline, a big correction. Then we hit up into the midline, big correction. So every time we hit up into one of these major pitchfork levels, you are going to see a big correction. Most likely, not guaranteed, most likely. We took our range low liquidity. Let's see if we can push up. And yeah. Yes, I did cover ETH already, ZMX. ETH, I do think we have a potential of, we hit our 1-to-1 Fibonacci target, and now we're pushing up. So if we break our golden pocket that we're at right now, I think we're going to continue higher. We're at our lower high golden pocket. If you look at this range that we're in, We're at the POC and the golden pocket. If we're going to reject, it's going to be right here. If we can get above it, I think we're going to come up to this daily. Excuse me. If we can get above it, I think we're going to come up to this daily level. But we're at our resistance. POC, golden pocket. I have not shorted this yet. I did take profit. Money flow looks bullish here. I think we could continue. Now, we did just print a hidden bear div signal. That's not a good signal. NAMI is known for its hidden bear div signals and hidden bull div signals. They are very good signals to look at here. So just be aware that we could roll over from here. And if we do roll over, I expect us to come down a little bit further, down to 34.10-ish, 34.15. Yeah, thank you guys for getting rid of spammers if there's any spammers in here. So thank you. Okay, let's see. We did ETH, we did Solana, we did SUI, we did Say. Let's go into XRP real quick. XRP, we're going to be brief too. I'm sorry, guys. I know I'm spending more than 5 minutes on these coins, but XRP, we were looking for that move. So let's zoom out here and let's talk about XRP. I talked about this in yesterday's video. If you want to see, go in depth, watch yesterday's video. But we bounced from the macro 382. That gave me a bias that we were going to make new all-time highs. You saw your wave one here, your wave two retraced to the golden pocket. I'm not going to pull it. You can pull it yourself if you don't believe me. Then we shot up in our wave three, breaking our 7-month descending trend, which is what we're trying to do on SUI right now. SUI's got its descending channel that we're trying to break above right now. XRP's already ahead of the game. XRP already broke its 7-month descending channel and exploded up. That's exactly what you want to see in a third wave, a break of a descending trend that's months long and a break up. Now, on your break to the upside, what do we say is the most common target for a wave three? It's the 1.618. Where did we look at as soon as we hit into this area? Last week, I made this video, and earlier on Friday, we talked about this. We've been talking about a rejection from 359 because this is pretty much 359. So you have your wave one, your wave two, your wave three. Now that we're rejecting here and we're changing market structure bearishly, we were expecting a wave four to drop us to between the 382, which is at $3, or the 0.5, which is at 278. And you can see that we have now dropped to hit our 382. So there is a potential that your wave four could be done, but there is a problem here. Your wave four retrace is usually longer than your wave two retrace, or at least as long as. Sometimes you have what's called the rule of alternation. So if your wave two retrace is really long, your wave four retrace can be really quick, or vice versa. If your wave two retraces fast, your wave four will drag out sideways and down slowly. So there is a certain rule of alternation where we could be done because we have hit our target. And I shorted around 259. My take profit was $3, and we have hit that. I'm out of that trade now. Actually, I'm long on XRP personally. And I'll tell you why I'm long on XRP here. But we did not hit the daily. I was looking to come down to hit the daily, and really that's 0.5. But now, and why I think XRP is maybe not done yet, maybe we're coming up to make a lower high before continuing down to another lower low, is because we had our initial high hitting into the 1.618. And then from that retrace, you can see this retrace here, we got up pretty much to the 0.9 Fibonacci, which is a flat correction target. But if you look at this push down here, we have a very clear 1, 2, 3, 4, 5. So you see a very clear 5-wave impulse to the downside. Now, in a bigger ABC correction, we look for what we call a 5-3-5. A 5-wave impulse down in a wave A, a 3-wave corrective move up in a wave B, and another 5-wave impulse down in a wave C. That is what you're looking for, a 5-3-5. And so in this potential ABC correction we're seeing from the 1.618 Fibonacci target, we are looking for a potential move now because we have broken market structure bearishly, right? Our range lows, we have broken market structure bearishly. So now because we have broken bearishly, we can look for our lower high between the golden pocket and the 786, this general area between the golden pocket and the 786 for a potential rejection for a B wave anywhere in here, and then see a C wave down, right? That's what we're going to be looking for over the next days and weeks here. So what I am long on this this touch of $3. I got in late. I'm not at $3. I'm late on this, but my take profit is going to be at this golden pocket. And I will take out 75% of the trade of the long position because there's a potential we could reject and fall back down. And now look at where this golden pocket is coming in here. If we look at this golden pocket, it's also a support resistance flip. It was your support of this range up here, this upper range up here. Lose it to the downside. Now you back tested it as resistance. It's also your golden pocket. So be aware that that 338 to 341 level could be a level where we reject on a lower high to roll over to come down to 278, or even in a worst case scenario down to 259, where the value area high of your breakout range is. You really don't want to come down that far though. Let's zoom out to the 12-hour chart. And if you're looking at your wave 3 impulse, so if we're looking at a bigger, let me just get rid of all of this. If you're looking at a bigger 5-wave impulse on the daily time frame, we have our wave 1 here, our wave 2 here, our wave 3 here. If you pull a Fibonacci from the lows of wave 3 to the highs of wave 3, that golden pocket right there is your invalidation for the impulse. So this is a bit confusing here because you say, well, wait a second, Divine Hood. Our golden pocket is in perfect confluence with the back test of our 8-month range. We ranged for 8 months. We broke out of our volume profile. Now you expect if you reject, come back down there, flip that volume profile to support, you continue higher because you're taking what used to be considered overvalued and now you're considering it to be a fair value or undervalued. Now the market's willing to buy at what used to be overvalued because they're bullish. You can see that golden pocket and that anchored VWAP from our prior all-time highs is going to be coming in by the time we get down there, right in this level at 257, 259, that general area. That will be an area where I definitely will be looking for a long position. But here's the thing. In your wave 3, if you do retrace to the golden pocket of a wave 3, it invalidates this as an impulse, as a 5-wave impulse. It doesn't mean that you can't bounce here and come back up, but it just invalidates it as an impulse. So if we invalidate the impulse, then we might bounce from here, come up to a lower high, and then kind of chop around it here for a bit, maybe lose it. You know, it just means the impulse is not valid anymore, this big impulse here. But it doesn't mean that you won't bounce there and get a good move. You could bounce at 259 to come all the way back up to 333 or this, you know, this area here, and then you could just fall back over. So I am looking at like the 278 potential long position, and then 257 is a definite long position I'm interested in if we get down there. But if we do bounce from there, I will pull a golden pocket. Let me do this. I will pull a golden pocket from the highs here to wherever that bounces. Let's just put it right on the POC, and I'll be looking at that 328 level as a TP level and a potential rollback down. Overall, XRP, I do expect it to continue up. I expect it to range and drop even for a little bit more because we haven't had enough time go by. Like, even if it's going to be shorter and we're going to see that rule of alternation, this push down from your wave 2 highs to your wave 2 lows was, what was that, 41 days. Now, this has been like, what, a week, if that? This has been 5 days, 12 hours. So we need at least a little bit more time for this corrective move. And so what would be nice is if we came up over the next week to that golden pocket and then saw one last push down to hit that 0.5, giving us at least half of the amount of time of this, even if it's going to be a shorter wave 4 because we had a longer wave 2. I just don't think it's done yet. Now, I could be wrong, and it could be done, and we're going to push up right now. Maybe the market's going to flip bullish. This thing's going to push up from right here. There is a potential. We have hit our target. Time-wise, it does not look nice. Target-wise, we've hit it. So we'll see. You know, we'll see. But we were expecting a rejection from this exact 1.618. We got that rejection from that 1.618. We were expecting to drop to at least $3. We got that drop to $3. So we'll see here. Money flow is dropping now on the daily and on the 12-hour, excuse me. But on the daily time frame, let's see. Yeah, money flow doesn't look the worst here, guys. It actually looks like it's trying to push up. Now, we were seeing some bear divs on NAMI here. As we were coming up here, you can see bear divs and money flow still draining out of the asset on the daily. I just think that, yes, we could see a move up to our local golden pocket before seeing one more move down. We'll just look at it. If we break our local golden pocket, then I'm going to start getting bullish again, and we can start looking for new highs to come in. That's it for XRP. Now let's go to Chainlink. Chainlink, then we'll cover Cow. We'll cover some of the other ones. So Chainlink, guys, I talked about this before it happened. I talked about the level we were interested in looking at for a long position was the SFP of the range lows and the daily and the anchored VWAP. Let me zoom in here onto the 3-hour chart. So we had come up to our value area high of our big range. This range, actually, I'll zoom out again just real quick to show you. This range goes all the way back to November of 2023. So almost 2 years long. And this is our upper range after seeing a years long accumulation down at the bottom. We saw accumulation pattern at the bottom for years. Then we had our expansion phase here, expansion all the way up to 35, 30, or 25, 23. And then now we've been ranging in this upper range for 2 years now, between like the 20s and the 10s down here. And now if we're looking at from our lows here, we did front run some very, very key levels down here. And I do think there's a potential we could even rotate all the way back down here. I hope not, but there's a potential. But you guys can see we've made it up to the value area high of the range. One thing that I don't like about this is we had front run the value area high by like, this is at 20.4. We made it to like 20.2. I don't like how we didn't actually touch the value area high. And I said, guys, if we do reject before actually touching the value area high, if you go watch I think it was last Thursday or last Friday's live stream, we were up in here. I think it was last Tuesday's live stream. So, and if you zoom in on the 1 hour, we have touched it. But if you zoom out on almost every other time frame, we have not touched it. So, and we are seeing 1, 2, 3, 4, 5. Now we saw a 5-wave move down. So because we've seen a 5-wave move down, we need to look for a lower high, and we've broken market structure bearishly. We took out our range lows. So first of all, you could have taken it along from the SFP of the range lows. This is our upper range. Just this guy here, our upper range of the last week or so. Since the 17th, our upper range. We took out our range lows. We saw liquidity grab. The second you pierced below this level and then reclaimed it at 17.33, you could have looked for the long. I described this in yesterday's video. I described this in all last week. We were looking for this trade, but we were also looking at the daily and the anchored VWAP at 17.85. I did actually take a long from there, from this area. And I put my stop below this low. I got a TP1, then I got stopped out. It was pretty much a break-even trade, but I'm long again from the SFP because I had an alert on that SFP. So now that we've SFP'd the range lows and we're pushing up, we did see a 5-wave move down here. So we need to be aware that we could come up and reject from the golden pocket before seeing another 5-wave move down, seeing your bigger ABC, right? So because of that, this golden pocket right here is a potential rejection area where we need to be watching. And really it's between the golden pocket and the 786. So let's turn on golden pocket 786 and let's pull that range again. And you can see, do we have some confluence in here? Let's pull this range. We do have, the POC is kind of right in the middle of both of them. Let's actually pull it from just the high. Yeah, it's not the best confluence, but I do think that because the POC is above the golden pocket, there's always that potential you could do this where you wick above and close, just like Solana did on its big log golden pocket just recently. But there's that 786 is not bad either. We do have those highs that are resting right up here. They're a little bit above it. But yeah, I'm going to be looking for a general rejection in this area before maybe rolling back down. Now, if we roll back down and we take out we've already taken the liquidity of our range lows. So if we roll back down again, we could drop quite a bit. We could drop quite a ways on Chainlink here. And you could just pull your Fibonacci. Let me get rid of some of this stuff. First off, let's look at our levels here. Do we have any weekly levels down below us? No, we're rejecting from a weekly right now. Kind of, that weekly's been hit, no monthlies around us. Daily levels, okay, we're bouncing from our daily, which was also down here. So these are going to be old dailies, so I'll delete these now. Let's go zoom out on the daily chart. And we can delete this daily because that was broken above. We can delete this daily because we bounced from that. We will have a new daily today if we close this candle green. But our next daily level, and let me get rid of that one too, I don't know why that's still there, is going to be at that 15.1 area. Now our golden pocket from the entire impulse from the lows at $11 to our highs, our golden pocket is going to be coming in at the POC. That's your ultimate level of support right there. If you come down to 14.5 to 14.2, specifically like this 14.3 area, that is your really big potential swing long buy opportunity. But we don't want to come down that far because if we do, that means that this impulse is completed. Now, this could be the start of a bigger, because this was a 1, but your wave 2 generally doesn't retrace to the 886. This hit the 886. So we're not looking at this as a 1, 2, 3, really. It's not the most common highest probability. So we could be looking at it as sort of an ABC here. Even your C wave, your flat or your B flat usually makes it to the 0.9 Fibonacci. And then your C wave would break these highs. You could come up to the 1.312. So it could be a potential that this is a flat correction here, and then we're about to roll all the way back down. And the reason why I'm concerned on that is because, let's turn off our dailies for a second, because we did front run a liquidity grab down here into your macro golden pocket, your most key golden pocket on the entire chart. On the weekly chart, if we go from our $4 lows or our $5 lows to our highs, you can see that golden pocket is coming in between 994 and 937. Well, we had front run on that multi-month drop that we just saw. Let me get rid of these. On that multi-month drop that we saw from $30 all the way to $11, we had barely front run this golden pocket. Barely front run it. And we also had some key liquidity right before this imbalance candle on the weekly, a weekly imbalance candle. And I just hate how we had front run that. So are we seeing a weekly corrective move to the value area high before coming down one more time to hit into this golden pocket and then see a real shot up? It's a potential. It's a potential possibility. Now, and also if we would have came a little bit lower and grabbed those lows, we would see a weekly we would see a weekly bull div potentially too. Something like this. You'd have lower lows here, higher lows here, weekly bull div. That'd be nice to see. But as far as local price action goes, we rejected from the value area high, general value area high. We grabbed our range liquidity of our range lows and we're pushing up. So I do think there's a potential that we could push up past our golden pocket and actually hit into the value area high at 20.4. We didn't quite hit it yet. It's just above us, 20.4. Now we break 20.4, we break above because you can see our anchored VWAPs also here. Overall, we're holding our anchored VWAP on higher time frames. Money flow looks pretty decent here. If we do start to break up above 20.4 and close a daily candle above it, I think we could see some big follow through on Chainlink. And I think we could push up to much higher levels. Like, let's see here. Let's turn on our naked weekly POCs at 23. And then I think we had something else. Now that naked monthly, I can delete that. We had, yeah, a daily's up at 21. But that was it, the 24 and 25 area. We have a weekly, we have a daily, and I believe we have a naked daily point of control. You can see we have that fair value gap in there. So I think 25 could be an area where we push up to with small ebbs and flows along the way. Okay, let's check the chat here. Okay, we got Cal, we got virtuals, TA for syrup. Cal, virtual syrup, and I will get virtuals decrypto because I know you asked about that the last time right towards the end of the stream. Quiles, thank you for your super chat, man. I appreciate that. Thank you so much. Crypto Wanderer, thank you for lurking, man. Welcome in. Welcome in. Trump to visit the Federal Reserve. Ooh, that would be quite a catalyst right there. Wow, I would love to see that. If we hold the 382, bullish continuation potential. Yes, Tales from the Crypto, I agree. If we hold the 382, we are going to continue. Yes, please hit the like button, guys. Also, guys, I do have a few partners of the channel, so I just want to go over this real quick. I know it sucks for you guys to hear this in the middle of TA, but I just want to go through this. So BYDFI is an exchange that I've partnered with. They are a VPN-free exchange and a KYC-free exchange. All you need is an email and a password to sign up. They're doing a really good deal right now where if you deposit $100, you can get a 50% deposit bonus. And if you do that, you can also sign up for the Telegram group where I do post some of my trade setups in there. Links are in the description for all of that. They offer 17% discounts minimum on trading fees, but you can get higher discounts if you deposit more money. They're offering up to $8,100 in futures trading bonuses depending on how much volume you move. So link is in the description for BYDFI. We do have MEXC. They're doing a campaign right now where if you deposit $100, you can get $20 free just for signing up. $20 deposit bonus for free just for signing up. And then they're offering up to $300 in futures trading bonuses. And then we have NAMI. NAMI is this bottom indicator here. It's a momentum and money flow indicator, and I really do love it, especially in confluence with Market Cipher B. This is what I use for entry and exit confirmations on my trade, because you do price action first, indicator second. So of course I'm marking out the key levels of interest, and that's where I'm looking for my trades. But in order to get confirmation whether to enter or exit or not, I'm looking at my indicators. I'm looking at bullish divs, bearish divs, money flow. And I use these two indicators. Now, I was using only Market Cipher B for about 4 or 5 years. But then when I got NAMI and used both of them together, my entry and exit confirmations have been laser focused now. So NAMI, link is in the description. They are doing a 50% off code. I don't know how much longer that's going to run. So if you guys are interested, I do have a 50% off code for my channel here. Divine50 is the code. And then lastly, we do have Bybit, and I just recently partnered with Bybit, and they are one of the largest derivative exchanges in the world, very reputable exchange. Link is in the description, and you can earn up to $30,000 in bonuses depending on how much you trade and how much you deposit on Bybit. So all that's in there. And now let's just get back to the TA here. Let's see here. Rumor has it Divine Hood parents accidentally threw away the baby and raised the hospital's computer. Yeah, that's... How did you know, Mark? How did you know? ZMX, thank you for the super chat, man. I really appreciate that. Okay, looks like we got a lot to cover here. So, hey, Divine Hood, have you tried other NAMI indicators like SMB or Travis? No, I have not tried them. You know, Market Cipher B was my thing for a real long time, and I know False Prophet, who's the creator of NAMI, because he was in Jason's Discord with me for years, and he created this as an alternative to Market Cipher B because it was so expensive for a lot of people. And the money flow on NAMI is actual based off real money flow. It's a little bit quicker than Market Cipher B's, and with both of them together, I really... They both have their use cases. They really do. And I wouldn't want to give away either of them. Now that I've traded with both of them, I wouldn't want to give away either of them. But I haven't tried any other ones because these are working so well for me. Okay. Let's do... What was it? Virtuals. We'll do Cow real quick and then virtuals. All right, Cow. So pretty much on Cow, last time we talked about Cow here, we were hitting up into the, I think we were in this area, right? Or we were down here on Cow. I can't remember last time we checked it, but we did say we have a high probability to break up to that midline, that pitchfork midline. And that's where our box of resistance was because it's our value area high of our range. This is our bottoming accumulation range, guys. So for Cow, long story short, let's zoom out to the daily. Long story short, it saw a huge drop to the downside, and then we started to form that bottoming range, that accumulation range, whether you want to call it an inverse head and shoulders, right? Left shoulder, head, right shoulder, or a model 2 accumulation right here. Bottoming pattern. Now, after you bottoming pattern, you break out, you see that expansion phase. So we got our expansion from our accumulation, showing that the market is flipping bullish, and we are bottomed out. Now after seeing expansion, we come back down and we back test the value area low of that range, or that just in general, that support level. You can see the lows down here. We took those lows on the daily time frame, and then we start breaking above. So what used to be acting as like this is still support. It's still holding a support. So we were in our accumulation zone. Now we can pull a pitchfork from those key, from the lows of accumulation to your expansion highs to your higher low correction. You pull your pitchfork, and then from there you can you generally, if it's going to remain bullish, it'll work its way up through the pitchfork, up to the top of the pitchfork. Right. So now we're expecting overall to kind of come to the top of the pitchfork over this push up. But on that push up, you can see here, let me just hide this range now. We will cover this range in a second though, because we are back testing it right now. We're doing some key back tests right now on this coin. I'm going to just hide a few things here. Let's hide this stuff. So you can see, now we'll zoom in onto the 8-hour chart. We hit into the bottom of the pitchfork. Now, I don't know why TradingView does this, but it moves the freaking things. Let's make sure that's right on there. Okay, so we came up, we rejected from the upper part of the lower band, made a 3-wave corrective move down, right? Your big 3-wave corrective move down. Try the pitchfork band again, reject again, but we create a higher low, we break above it, we come up to the midline. Midline acts as resistance for a bit. One, two tries or so. We form a range in here, though. We're still bullish. We're still making bullish accumulation in here, a bullish range. We break above it, come up to the upper band. We're rejecting from the upper band, and now it looks like at least we're creating an impulse down. So this could be the end of this impulse here, and now we're about to see a 1, 2, 3, 4, 5 pushing down, because one thing that we never did is we never took out these range lows. And we wanted to take out those range lows with this low. Unfortunately, we did not do that in our prior range. So there is a potential we could drop down to take out those range lows. Money flow is starting to look good on the daily again. And here's the thing, guys. We have now, let's turn on that range again. So this bottoming range, let's turn on that range again. And you can see here, let me pull this range all the way. I guess the last time we looked at this was when we were right around this area, July 10th or so, July 9th, July 10th. But you can see that's the value area high of this range. So not only was it our pitchfork midline right up in here, but it was our value area high. And so, yeah, first time we come up, pitchfork midline, value area high, rejection. See a drop. Come up again, rejection. See another drop. But we held market structure bullishly overall, did not grab liquidity, and we saw one last push up to your upper band. We did reject from our upper band. We made a lower high. I bet you that's into the golden pocket. I haven't checked cows since the last time we looked at it. So let's just look here on the 2-hour chart. Was that a golden pocket? Let's pull it from the highs to our lows and pull this over. Yeah, general golden pocket 786 area, right? That's your area you're looking for a lower high rejection between the golden pocket and the 786. Altcoins will often come up to the 786, especially lower liquidity altcoins. And also with that push up to the 786, we took local liquidity of your last highs. Okay. Liquidity grab into 786. Now we're dropping here. So yes, it does look like we could be seeing that drop. Well, let's see here. 1, 2, 3, 4, 5. You see a 5-wave right inside of this move here. The only thing is you could call this a running flat, but it's not common. Oh, here, that's a flat wave, probably come up to the 0.9 right here, and then you come down. But generally, you want to take those lows out. We did not take those lows out because that could have been a flat correction there. And then another 3-wave correction here before seeing that impulse down. I don't like that, though, because those lows weren't taken. Anyways, not even looking into Elliott waves. Let's just keep this simple here. We have our value area high of our range. That it was acting as resistance earlier, a couple weeks ago. We broke out of it, back tested it, and then shot up to our next major resistance, being the pitchfork band. So we're above it, and we back tested it locally already. Very immediately back tested it. But we have not had the higher time frame back test. So after rejecting from our more macro resistance, we are coming in for the higher time frame bullish back test. If this holds, and the midline overall holds, yes, you might see some wickage down. We wick down to that monthly level. But if we do hold this overall, then we can expect to push back up and potentially come back up and continue this bullish trend overall. But because we have on lower time frames, now we're... I didn't mean to do that. Okay. Hold on. All right. Sorry, I did not mean to do that. But now because we have broken market structure on lower time frames, like this is your this was your MS break, right? You break that, now you're breaking overall market structure bearishly on the 2 hour time frame or higher, you know. So now we can pull our Fibonacci from the highs to the lows, and that golden pocket is a potential rejection area. Now look at where that golden pocket is coming in. There's some key internal liquidity resting into that golden pocket right there at 44 cents. And if we pull a volume profile of just this upper range, your POC is going to be there as well. So the point of control of your previous range that you broke down from is going to be there. So that 44.2 to 44.6 area is going to be a resistance area where you could be looking for a rejection before continuing to drop a little bit lower and to take out these lows at 34.9. I don't want to see us come that low because if we do lose, long story short, if we lose this value area high and this pitchfork midline, which is the general level of support we're at now, zooming out onto the daily time frame, you can see here that this is our general level. We saw a wick past it to hit the monthly today, but we want to close our daily candle at or above this value area high and at or above the pitchfork midline. You can see here, let me zoom in here so you guys can get a better look at this. Right now, our daily candle is above our midline. So if we close where we're at today, that would actually be a nice wick on the bottom to hit into that monthly, to backtest that monthly. But we're closing our daily candle above the value area high and above the midline. Yes, you could chop around and form a range in here for a bit. That's sometimes what often happens. Look at Sui. If you don't, if you want to see an example of that, look at Sui. But then we want to see it overall hold, and we want to push up. And also Bitcoin is doing this right now with its midline. If it can hold it, we're going to push up again. If not, you could see a big flush down to grab liquidity of your last prior range lows. So I think that we are going to, if we do close our daily above here, we have a potential of working our way up to the top of the upper band. Oh, in time. Of course, it's not going to be a straight up move like that. We'll probably come up to the golden pocket, reject, create another higher low, and then continue to work your way up through that area. And then we would be looking to take some profit around, 54 cents to like 55 cents in this general area. And then you could look for another pullback from that area to backtest those prior highs to come up to the top of the pitchfork, which, is going to be anywhere like 66 to 68 cents, 66, 68, somewhere around there. Overall, it doesn't look too bad. Like daily time frame money flow is starting to look like it wants to curve over. On NAMI, we're bottoming out on the momentum wave, and money flow doesn't look the worst here. Our key is going to be whether we're going to start to close daily candles below the value area high. If you close daily candles below this value area high, you're going to be in trouble. So that is going to be coming in right around 39.2 cents. If that happens, then I would expect to move down to like 34.9 to take those lows. Let's see here. You have your wave 1, your wave 2. Actually, this is a wave 2 because it's a 3-wave corrective move. Okay, so that's your wave 2. Then you have another 1, 2. So that's a double 1, 2. All of this is your 3. So let's pull a Fibonacci here. From the lows of 3. So wait, from the lows of 3 to the highs of 3. And let's look at our 4th wave targets. Okay, and then let's measure to see if that's more than 100% move up. 75%, so not quite. So now we look at this fib levels between the 382 and the 0.5. So you've hit your targets for the 4th wave correction. So we could be done here, guys, with our, if we're looking at a 1, 2, 1, 2, here's your big third. We're going to see a 4, 5, 4, 5 like that, and create your overall double 1, 2 impulse to the upside. Then our 4th wave targets have been hit between the 0.382 and the 0.5. We want to see this hold, and we want to see continuation up. If we hit the golden pocket of that move, it's going to invalidate that impulse. So, and that is going to be right around those lows, unfortunately. And that's really our key point, because we just talked about it. If we lose this value area low and the value area high, and the midline, we do expect to flush down and potentially invalidate that impulse. If we hold it, we expect to come higher. Very, very simple. As far as lower time frame goes, hourly, let's check here. Money flow's coming up again. Yeah, it doesn't look too bad on the hourly. Let's go to the 4 hourly. Money flow's trying to cross over into the green again here on the 4 hour. We did get our momentum wave bottom. We did print a bull div on NAMI here. You can see NAMI's a bit faster, so lower lows on the price action, higher lows on the momentum waves in here, which 4 hour bull divs into the back test of your value area high is pretty nice to see. So I would say we at least have a chance to move up to your PO, to this golden pocket at 44 cents, 44.2. Let's go to the 8 hour. Yeah, 8 hour money flow's trying to come back up again. Your momentum wave looks bottomed. Yeah, you've bottomed out on NAMI, and NAMI money flow doesn't look the best on NAMI yet, but I would say you can at least see a little bit of a move up here on cow up to 44 cents. And that's the area, your key area of resistance where you're going to want to watch for a lower high to come in. And if that happens, then you're probably going to come down to 35 cents. But that's it for cow. Let's go into virtuals. I just had my alarm go off, guys. I am supposed to be leaving right now, but I'm going to finish the ones that I have on the chart. So virtuals, let's see. We did cow, virtuals, AVAX, Nicholas, AVAX is at a key spot too. Let's see here. What was the other one? There was another one. Sui and Aptos. Guys, Aptos lost a key, golden pocket, and point of control. And unfortunately, it could continue a little bit lower, but I don't know if I'm going to have time to cover that today. Where was that last one? It was cow, virtuals, and CRV. CRV is easy, 86 to 89 cents. Virtuals. Okay, let's just look at this. So it's a newer coin. Today's only Thursday. I'm going to mark out this weekly level here. And let's mark out our monthly levels. This monthly has not been hit yet. Right above us. And that monthly's, yeah. I don't even know if I should be marking it out, but we'll just do that real quick. Let's go on to the daily. Ooh, this doesn't look good right away, I can tell you guys. Well, this looks like a nice three-wave corrective move, but this ascending channel here we're seeing is generally bearish. And let's look at the volume here. Yeah, volume relatively decreasing as that's going up. So we could be looking at a WXY correction to the downside. A WXY is like an ABC, but instead of a 535, it's a 333. Just a series of three-wave moves and a bigger complex correction. I don't like how that is moving like that. And then, so your weekly level of support below us is going to look pretty nice, though. You do have your range that's forming, and I would say this is the range lows, or we could even throw this here. We already SFP'd that, so that liquidity has been taken out, although that's a very shallow SFP. I would even be looking at this guy here, and that's your range. You can pull your range here. That's your daily range that you've been in since May 25th. So about, June 25th, July 25th, about 2 months now we've been ranging here. And then let's mark out some daily levels here. Got a daily level there that we should mark out. We've got our daily highs up here. And then, of course, this daily up here is going to be important because it's right at the value area high over your daily range. So I'd trade this range until it breaks, right? Trade the range until it breaks. You've been in this range for 2 months. It does look like overall, guys, I would say we could see that bigger move down. And it's starting to break down. Let's see if we reject it from our local golden pocket. So let's pull a fib from the highs to the lows. No, golden pocket hasn't quite been hit yet. And actually, that's such a nice resistance now that I see that. This is an area where I'd be interested in looking for a potential short because it's value area high, golden pocket, daily level, all right up there. Let's turn on our naked monthly points of controls. Let's look at those. Okay, no naked monthlies, but you do have a fresh naked monthly. Actually, that's this month's, so we can't mark that out yet. But just know that that daily is going to be also have some volume support there at 147. I would definitely be looking to potentially long that because this month's naked point of control is there and the month is almost over. It's the 24th of the month. There might be a weekly one there. Let's check that out. Weekly. Yeah, there's a naked weekly point of control there. So that already right now is a very, very nice support level. Daily and a naked weekly point of control at 147. And then we have this week's naked weekly. We don't have anything else. Okay. Naked dailies. Yeah, there is no naked daily up here. Wow. I'm actually surprised by that. Okay, so we got our golden pocket value area high daily there. Also, it looks like there's a little bit of that fair value gap in there. That daily fair value gap fill is up to that area. Okay, let's turn off these guys. That's the start of it. So you don't really want to pull a pitchfork from the start. I mean, I you could be looking at a small pitchfork right now, but there's not a lot of price action here. What I would actually be looking at instead, let me take this range here. You're at the value area low, by the way, of the range right now. And if we pull a Fibonacci of this move up that we've been seeing, you're at your golden pocket. You wick to your golden pocket today. And if you close your daily above this value area low, you could see a bounce from here to make it up to this whatever this is, 207 to 212. I mean, that's what I would be watching for if you close your daily above 158.3, which is the value area low. If you don't, then you're probably going to continue flushing down to 147, which is just below us, that 147 level. And then I'm going to hide this range for a second. Let's look at our channel that we have been in, breaking that channel to the downside. That was your channel. If we zoom in now and on the 4-hour time frame, you can see a very nice channel that we've been in here, chopping around. So we're starting to lose it. We hit into our golden pocket, but we're back testing the channel right now. And if we can't get back inside of it and close above the value area low, then we're in trouble. Let's turn on that range again and let's look here. So let's pull this all the way. Yeah, I mean, we're right at the value area low, but this is bad to me because when you're in a channel like this that's multiple weeks long, a couple weeks long since June 25th, so about a month, we've been trading up in this. Now we're starting to break it down. You bounce from your golden pocket, but if you come up here and reject, you expect to continue down. So today's daily candle close is actually important because it's our first daily candle close below the channel trend. And so and then if we close our daily below the value area low, that's even worse, So we're at support. I would say we're at support locally. Money flow is looking decent, starting to come up. We did get a green dot. No bull divs, though, on the 4-hour. We're going to want to see some bull divs into this golden pocket. Let's see if we can find any bull divs into this golden pocket. Let me get rid of this. No real bull divs on the 2-hour. Money flow starting to come out again on the 2-hour. Not looking good there. Hidden bear div just printed on NAMI. Rejecting from the channel. Not good. 2 strikes right there. Okay, let's go on to our 1-hour chart. No bull divs on Market Cipher B. We are seeing some on NAMI, but that 2-hour hidden bear div happened after the bull divs. So be aware of that. And then 15-minute chart. Were we seeing any bull divs coming into here? No bull divs on the 15-minute. Money flow overall is curving up here, but that big momentum wave at the bottom here kind of messed up all those bull divs in the forming. And honestly, like hidden bear div just printed on the rejection of the VWAP earlier today. I don't like the way this looks for a bottom. I honestly don't. I have to say, I think we could probably at least even come down to 147 right below us. We have a naked weekly point of control and a daily, but you would want to wick down there real quick and then start to recover this golden pocket pretty quickly. Because if you start to close daily candles under that golden pocket, you're in trouble. So like daily time frame here, you can see on our daily, we wicked here, but if we start to close dailies underneath it, so like maybe tomorrow, we close this daily candle around where we're at now. Let's just say that we have 3 hours left, about 3 hours left. If we close the daily candle within this general area, we could probably expect one more day down to actually hit this support level, but we want to close that daily candle body at or above the golden pocket. It doesn't look the best to me, honestly. It doesn't look the best. And we do have to remember that we could be in that bigger three-wave complex correction coming down to take out 119. And unfortunately, that might be the case. Let's do this. Let's pull a trend-based Fibonacci extinction. Okay, and then we could even turn on our 618 here for your Y wave. Yeah, oh gosh, you guys, that could be right around that. You could take out those lows right down there. Just see a SFP of our prior daily lows, not the overall range lows. Because this is questionable, rather to call this the range low, because this was still kind of in this impulse. So you could even call these the range lows, because this low here was in this initial big impulse up to this guy here. So that was your first dead cat low. Then you got a new high. So I would say, yeah, this could be your range lows, and that 618 ending your WXY into your 618 at 125, seeing an SFP into 125. You really don't want to close. If you start going below 147, you're in big trouble. 147 there, you're expecting a quick move down to the weekly at 137. You might see a small bounce at 137 just to come up to back test that value area low again on higher time frames and then come down. And then you could see that bigger push up, creating that overall one more liquidity grab, creating a bigger range here. Virtuals, I know nothing about it. It doesn't look the best right now as far as technicals go for a big move up. Close your daily candle above the value area low, and then we could talk. So maybe next on Thursday, if you're here, let me know about it again. We'll look at it again and we'll see what's happened. Okay, we did cow, we did virtuals. A CRV here. CRV is looking okay. So CRV, we hit into. Let's just zoom out. I'll zoom in onto the 4-hour chart. The CRV did. Oh man, I'm so bummed that CRV didn't take those lows. You see here, we didn't quite take those lows. We front ran them just barely. I had an alert there. You can see I had my alert there. And really, I wanted to come down to the monthly. Now, this monthly has been tapped. We broke through it, but we have not back tested it since then. And our large range. So here's the deal for CRV, guys. We had our big range, our bottoming accumulation range. You can see here, this is our huge bottoming accumulation range on the daily, like multi-year long since 2022. Though this is our bear market range in here because it was trading way up in here. We came down and we've been trading in this range. We're breaking out once again, guys, with the bigger move up. We had this big move up. We came into our log golden pocket bounce, and then we saw a very strong impulse straight up, pretty much straight up on the daily, pushing up, and we broke above our value area high, which is at 86 cents. And so now that we're above the value area high, long story short, now that we're above the value area high, we need to back test it to flip it into support to continue higher. So we could see this back test, continue higher. And really, like 158 up here is going to be 155, 158 is going to be a really good level to watch as far as macro. That's a macro SR flip level, support resistance flip level. But we have been correcting down in a descending channel type structure. And let's actually zoom in onto the 3-hour chart in a sideways range here. And you can see we have not come take out the lows of the range yet, which are at 90.3. Or you could have even thrown it there at 90.6. And in that case, you have a double bottom, but not really a liquidity grab. And I would pull a channel. Let's redo this channel from the like this, and we'll bring it down to that first low. Yeah, I would say we're just chopping around in this descending channel, but overall, this, you could even say this is bull flaggish. I would only bring it from this low here, but this is your pull. This is your flag in the making. I would want to come down and actually hit that support. You can see the bottom of the channel is right into those 86-cent back test of the value area high. And then I would look to push this thing up. Now, my first take profit is going to be that naked monthly point of control at 112.9, because you can see your macro 786 Fibonacci level is there as well. And so that would be at least a partial TP for me. But it's a shame that we didn't make it up to 132. That's our 1.618 Fibonacci extension. So your third wave, you kind of expect your third wave to push up there, and it still could. Your third wave, generally, you want to be the most aggressive, most impulsive wave to the upside. And yes, this is only a small accumulation or a small range within your bigger straight up move. So if this is a wave one here, this is your wave two pullback to the golden pocket. Your wave three should continue up to that 1.618. Now, it's not going to continue straight up like it had been. You will see small pullbacks. You will see, generally stuff like that in order to get up there, especially towards the end. You'll start to form that exhaustive channel coming up into that 1.618. Then once you hit up there, you'll see a bigger sideways correction, and then your five bringing you potentially up to that 155, creating that bigger 5-wave impulse to the upside. So overall, I do think CRV is going to continue higher, but I would like to see it come down to like 86 cents, 86 to 89 cents, and grab the liquidity of our lows that we've been looking at. I have alerts down there. And then as soon as we grab that liquidity, we can break this kind of descending channel and push up at least to 112, but probably up to 132. Yeah, and let's pull our range, our volume profile of this range. So just looking at scalping this thing, you got your range here. We're pretty much at the value area high now. We rejected about an hour ago from the value area high, and we're at the point of control. So if we lose this point of control, we could probably expect a rotation down. And I do think that we might just continue rotating in this for a bit. Money flow looks pretty good here. Let's go on the 4-hour chart. But overall, your 4-hour money flow is coming down. It's draining out. We were seeing some bear divs in here, higher highs here, lower highs here, but then, and even here, that's like equal highs. Let's go to the 8-hour. Yeah, I mean, you can see the bear divs, bear divs, bear divs as this is forming. And then 8-hour actually doesn't really have bear divs either. Money flow looking pretty good on the 8-hour. You know what? It might happen. We might not come down and grab this liquidity before going. It would be a real shame. Honestly, it would be a real shame. But the way money flow is starting to look on some of these intermediate time frames, let's check the daily out. I mean, Hidden Bull Div printed on the low a couple days ago. Money flow starting to come up on NAMI and on Market Cipher B. Market Cipher B's momentum wave is starting to roll over. I can't take a long from here. It's just against my rules. But I think this thing might not take the liquidity before breaking up, kind of like Bitcoin. Speaking of Bitcoin, let's look at Bitcoin real quick here. Yeah, Bitcoin's rejecting the value area high. I mean, guys, we're just rotating down. We're rotating the volume profile over and over and over again. So at 118, I am potentially interested in the long. We'll see how it looks as we're grinding down there. But CRV, oh, come on. I expect overall more upside to continue. The scariest part of all of this is if you're, let me turn off some of these levels here. Scariest part of all of this, and by the way, your macro 382 pulled from the lows of 3 to the highs of 3 is coming in at 86 cents as well. So that's another reason why. Because if this 382 acts as strong support and a strong trend, so push up here, bounce at the value area high 382, you expect to continue. But overall, guys, you can see that if we look from these lows here, this move could be an ABC correction because you did see a big drop here after seeing this impulse complete. And on a bigger three-wave correction, you expect to make a lower high overall from this move down. And then you expect to roll over and really come back down and take out these lows into your macro value area low at 30 cents. But we hit into the 1-to-1 Fibonacci. Not good. And that's where we're rejecting. So in your bullish case scenario, you wanted to come up to 132. That was the 1.618. In a bearish case scenario, where's your rejection levels? Between the 1-to-1 and the 1.236 is if this is a bigger ABC. A, B, C here. You're looking to make an overall lower high, and your common target for rejection is the 1-to-1 to the 1.236. Now, I like that 1.236 because it's where that naked monthly point of control is. And it's where that 786 is at 112.6, 112.9. But you can see here, where are we rejecting? At the 1-to-1 Fibonacci extinction. So in your bearish case scenario, which is not my highest probability, but we do as a trader need to be aware of this, we could reject here. And if we start to lose back underneath 86 cents, then that might be the case. We might be about to go to Dump City. Unfortunately. Okay, that is it for CRV. Let me check the chat, and then I got to get going here soon, guys. Yeah, please like the video, guys. If you haven't liked the video, PAAL. Let's see, is that it? Nami is a guy. Damn, I winked on his avatar. Oh my gosh, that's so funny. Mark is the funniest mod there is too, probably. Mark, I don't have my pants on again, so just to let you know. Oh shoot, wrong chat. Oh, ETH, is ETH dumping? Let me check ETH real quick. Is ETH rejecting that golden pocket? No, not really. Guys, I don't call this a rejection yet. We're just, oh, okay, starting to. Ooh, hidden bear div signal, money flows coming out. Oh man, okay. Yeah, I mean, let's just look at a very small scalp here. We kind of already missed it, but if we put our stop there, VWAP, that's not good. No, I mean, knowing that if you reject here, you are planning to make new lows. You could, we've kind of missed it a little bit. I would want to watch for a little bit of a bounce up, back up again, but you could be looking to short this value area low. And then you're putting your stop above this high. That's a 2-to-1 risk reward. That's not the best trade, but knowing that if we are looking at a bigger three-wave corrective move down, you're really wanting to come take out at least these lows. And I would want to come down to the bottom of the pitchfork band. That's a 5-to-1 risk reward ratio. But I would protect position as quick as possible. If we start to bounce from the VWAP, I would probably pull out 25% and move my stop to break even, just in case. I'm not convinced yet that it's going to drop from here, but the resistance we're finding here is not looking too good. And on low time frames, we are starting to break market structure bearishly. We're breaking below these lows here. And you could even pull it to this low here, which we just broke below. It's just a wick, but we broke it. Yeah, we'll have to see here. I don't maybe my bias is higher on Ethereum, but that doesn't mean our correction is over, guys. We corrected over the past week, but after pumping so aggressively, we're at major resistances on a lot of these coins, and you're not going to see a quick little drop like this after pumping so aggressively. Generally, you want to see that bigger correction take longer there. So, I mean, I wouldn't be surprised if we do continue. Solana's losing the yeah, we're rejecting the bearish backtest of that value area high. After coming back inside of it, we're rejecting it. I think Solana's coming down to one. Now, here's a good scalp trade we could look at. A short trade here. Of course, you're going to have to enter. I would wait because we're at the VWAP, so you don't want to enter at the VWAP. But if we see a small bounce from the VWAP and come back up to like 188-ish or so, 188, 189, I would be looking to set my stop above these local highs that we just created. And I'd be looking to come down to 175. That's a 3-to-1 risk reward ratio on a scalp short there. It doesn't look too good for Solana. If we close our daily candle today in 3 hours below 189, or really it's now at 190-ish, you're in trouble. Yeah, I mean, ooh, 190. Yeah, honestly, guys, this is not looking too good here. Okay. Oh, well, let's do PAL. PAAL USDT. I'll do Bybit. Bybit's probably the best chart. Ooh. I have no idea what this coin is, so weeklies, okay. Monthly here. And I would say this is your daily range that you're looking at is just this lower range here between the weekly and the monthly, really. That's where you're chopping around between. So we bounced from value area low. We held it multiple tests on the daily time frame, and we pushed up to value area high. Okay, you can see we do have a liquidity grab of our last daily highs right up into your monthly resistance. So it wouldn't even surprise me if we wick up a little bit past this value area high to hit that monthly, see the liquidity grab, and then fall back inside the volume profile. That would actually be a really nice short position. I'm actually going to look at that. I'm going to set an alert on this. But daily time frame money flow doesn't look too bad here, actually. And you were seeing bull divs on the daily. Lower lows on the price action, higher lows on the momentum waves. That would have actually been a nice little long to take there. You wouldn't have probably taken this first leg up, but on the back test of the value area low here, you could have got in, or you could have gone in on this value area low or this value area low. You had chances to get in here to at least take up to the value area high. Now we're at the value area high. Let's pull our Fibonacci from from the highs of this range to the lows of this range. And this was also a very nice liquidity grab here. Look at that, or no, double bottom. Okay, that is concerning. You didn't actually grab the liquidity. Very concerning there. Yeah, look at your golden pockets right on your monthly. So that's it right there. That's your resistance. If you SFP into the monthly, I mean, you know, could be a really nice short trade. Money flow on the 4 hour looks good, and you did just print a hidden bull div on the low earlier today. Yesterday. But we expect to find some chop around this value area high. It is resistance. It's value area high, and just above it is that monthly into the golden pocket. Now, that's primarily what I'm interested in. I would like to see a little bit more of a push up SFP into that golden pocket at 14.75, 14.73. If we hit into that, now I'm not going to short the monthly. I will look for a rejection from the monthly. And as soon as we lose 14.3, I will short my stop. I will short here. My stop will go above that monthly level, and I'll be looking to take it down, at least down to these range lows of this small internal range, this 15-minute range that we're seeing in here. Yeah, I mean, your value area low is right around your range lows there. So that would be kind of that. And then that would only be a TP1, but my TP2 would be down towards the bottom. All right, let's do this. Let's pull a golden pocket from the lows, our last major lows. Nope. Just make this a little bit easier on us. Now, we don't know if the high is in yet, but like, let's pull it from the low to our current high. Yeah, your golden pocket is a little bit above the POC, but if we come up to the monthly, let's just throw it right on that monthly. And then let's look at our 786. Okay, I don't like that. That's not looking too good. And actually, let's look at the push up though. How 84%, that's getting close to 100. So let me just do this. Let's check out our log golden pocket. Okay, 786 would be at the value area low, and then let's turn on our golden pocket as well. Actually, let's do this. GC pocket. Let's turn that onto log scale. Yeah, I mean, look at that. Look how nice that is. If you reject from the monthly and you fall back inside your volume profile, you're probably going to expect a move to rotate down to the value to the POC, right? POC is in perfect confluence with your log golden pocket. And then your next level, if you lose that log golden pocket, of course, is going to be the value area low, which is in confluence with your 786. So those two areas would be really nice to look at. That is your daily bottoming range here. So potentially a nice swing short position from the monthly at 14.7. But with the way money flow looks right now, it looks bullish, and we might break through that. If we break through that, honestly, we're probably going to come for the highs. You know, first these highs at 16 cents, and then the highs really, the ultimate highs around 19 cents. So that's the key. Oh, syrup. That's right. Syrup. Okay. Sorry, Frank. You asked about that early. ETH rejecting and pushing the big wick through the MA. Do you enter straight after the candle closes or wait for the next candle to close red to enter? Honestly, wow, look at this thing. What is, wait, that's stop. I'm not looking at stop. Syrup USDT. Let me answer, Alex. You said if we ETH is rejecting and pushing that big wick through the MA. Let's see. I will go back to syrup. I promise. I don't. I would wait. Okay, we grab the liquidity of this little internal low, but if we do come back up into that, like reject from this 618 level, 37.25 ish, then I would probably look to potentially enter a short here. 3-day red dot printing on SUI. Yeah, SUI is probably going to come a little bit lower, guys. We're back inside the volume profile. Or we're rejecting from the value area low. I think we might come to 347. Unfortunately, ETH, I mean, as far as the short goes, I would probably look, if we do come up to 325 and reject, I would probably look to take the short that a short there. Um gosh. Let's look at our 30-minute chart. Yeah, money flow is curving over on a lot of these. We're printing hidden bear divs, hourly chart. Money flows starting to roll over on both of these. We did see it does look like we're going to roll over. We took the internal liquidity here. You can see we took internal liquidity, rejected from golden pocket, rejecting from golden pocket, starting to change low time frame market structure bearishly. So I potentially would look at taking a short here, but I would probably wait for it to come a little bit higher. I mean, if you wanted to, you could pull a golden pocket from this internal high to the low, 340-ish. Yeah, I mean, that 340-ish is nice because you see this little 5-minute wick. There's some liquidity right up there. Ooh, it's a tough one. I would say between like 325 and 340, you could look for a short. We'll check that in just a second, but let me check syrup. Guys, I do got to get going soon. I've been streaming for almost 3 hours, and I was supposed to leave a little bit ago. Syrup, USDT, okay. Ooh, this is a new coin, huh? Okay. There's not going to be too much to analyze here, but let's check out what we can. Do we take that? Yes. Do we take that? Yes. Do we? Honestly, like, you bounced from that golden pocket. Okay, so from our last big daily low to our highs that we made, we came down and we bounced from our golden pocket and we're starting to push up, starting to break some market structure up. So let's look at, yeah, I would honestly look at this range that's forming from here on, starting to form a sideways range. You're at the value area high right now. You bounced from your value area low, which was also your golden pocket, and we're at the value area high. So that would have been a good scalp there. Now you're starting to reject from your value area high. Let's pull a fib from our last 4-hour high to our low. Yeah, okay, look at this. You wicked up. You're rejecting from your overall golden pocket. You wicked up to your 786 value area high and you're rejecting. So your overall bearish trend is continuing. Lower highs, lower lows, lower highs, lower lows, lower highs, or lower lows, lower highs, lower lows. That's still a lower high overall on the bigger trend, but you did break market structure bullishly, like taking out these internal highs. So I would watch that POC now because you could come down. Let's pull a fib from the lows to your highs now. Yeah, and the POC is your golden pocket there. So now you're going to be watching for, like, if you short this, this would be a TP, 45 cents. And honestly, if you miss the 786 value area high or miss the actual golden pocket, like this is getting a little bit too late to short, but I would watch for this as a potential bounce area, 45 cents. And in that case, I would look to be bringing it up. First TP would probably be the SFP of the highs just created earlier today, or was that yesterday? Yeah, this was today. So, um, let me check the daily. Green dot on the daily, bull divs here on the daily. So, yeah, this could continue pushing up, breaking out of this volume profile here. Actually, let me pull the volume profile of just this upper price section. Okay. Yeah, this volume profile is actually not as nice as respected. Is pulling it back to here. Like this one's much nicer respected. So I would have to go with this one over over the small one. It is being much nicer respected, but you can see that the smaller volume profile, the value area high hasn't quite been tapped yet. I don't like it. I would say, and actually, hold on. That's golden pocket? Yeah. 40% move down. Let me check something here. That's a 40% move down. It's more than 30%, so let's do that. Okay, didn't change much at all, so that's because it's very local. Oops. Yeah, very local. Money flow doesn't look too bad on the 8-hour, and you were seeing some bull divs here at the bottom. Lower lows here, higher lows here, money flow coming up. So if you don't reject here, I would say you're coming up to that weekly, daily area. Let's actually pull a fib from the highs to the lows. Yeah, that. Okay. I think if you break above where you're at right now, that 786 is very enticing up there. So I would actually be looking for a bounce from 45 cents. Like if you keep rejecting now, come down to 45 cents, look for a long up to 60 cents. You would be taking out the internal highs because our larger time frames are seeing nice bull divs here. So you have your internal highs here, semi-equal, 1, 2, 3 semi-equal highs here. You have liquidity resting above those highs into your weekly and into your macro 786 on that drop. So 45 cents up to 60 cents. Now, if we come up to 60 first, I would potentially be looking for a short from 60 to pull back at least to 53 cents or 54 cents. But at that point, you might repull your golden pocket from the lows to your 786 and look at that. Yeah, that 786 would then be at the point of control as well. I personally wouldn't short where we're at now unless, let me check something. No, I wouldn't short where we're at now, personally. We missed the short from the value area high because you could bounce from this VWAP. Now, if you bounce from this VWAP, you have broken 12-minute market structure bearishly by taking out these lows here. So now what you could look for, I wouldn't short here, but if we do bounce from the VWAP and then you take a golden pocket pull from there to there, and you look at that golden pocket and you come back up and reject from 52 cents, I would look for a short from there. So say you do this, boom, and then I would short this. Stop goes above that high. I'd put it right above the value area high, and I'd be targeting 45 cents. That's a 3.5 risk to reward scalp. And then from 45 cents, I'd be looking to long up to 60. Stop would go below these local lows, these internal lows right here. That's a 9-to-1 risk reward ratio. So that's a decent play right there. Of course, you want to see confirmations. If you're coming up to 52 cents and your money flow looks bullish and you're not seeing bear divs, you're not going to take that. ETH, I do think ETH could get to 4K before Bitcoin. Well, I don't think Bitcoin's going to 112K. I think Bitcoin's probably going to bounce from 115. Yeah, the poor kid's waiting for me, that's for sure. Okay, guys, I got to get going here. 3-hour stream. I hope you guys got something out of this. Please like the video if you got anything out of this. As far as Ethereum goes, man, this is a real tough one. I am tempted to short this right now. I really, really am tempted to short Ethereum. I'm just going to look at this real quick here. Let me get rid of this bigger. Yeah, that POC. Okay, the POC is actually at 37.36. So if you come up to that 37.36 area again and reject, you could be looking at a scalp short where you're shorting the point of control. Your stop would go above that high. And then I would really be targeting as my first target the actually the value area low. You'd have to target the value area low because you're rejecting POC. So there's a high probability you're going to rotate back down to value area low. And then honestly though, the final TP would be the bottom of the pitchfork band. Yeah, golden pocket and value area low would definitely be a TP. So that's your TP1, right? Your TP1 would for sure be golden pocket value area low. That's still a 3.5 to 1 risk reward ratio, even putting your stop above those local highs. Thank you guys. Thank you, Mark Dutch, for always doing such a good job and getting rid of those spammers and just being funny and awesome. And thank you guys all. Great questions today. Thank you all for the kind comments. I'll be live again on Thursday.